Risk evaporates. China debates a cut to quarantine rules, but stocks drop as inflation and growth risks continue to swirl. Plus, out of power. Tesla slides post-market as delivery and supply bottlenecks hit third quarter results, but Elon Musk promises an epic year-end.
Tom, let's look at the futures. I want to, of course, talk extensively, not only about the economy's cover, that's definitely a forefront of our mind, and the political turmoil here in the UK, but we need to talk about Jim Bullard and, of course, that interview that he gave to Kathleen Hayes. DAX futures, FTSE futures down between 1/10 and 4/10 of a percent.
Yeah, it was a bit of a dovish flavour to that interview with Jim Bullard, suggesting that maybe there's going to be a pause in 2023. The market's, of course, expecting another jumbo hike from the Federal Reserve in November, early November, the 1st to the 2nd. 75 basis points is the expectation, but James Bullard telling our Kathleen Hayes that maybe 2023 is when they start to take a pause and recalibrate, depending, of course, on how the economic data comes through. The markets here in Europe looking at potentially a second straight day of losses then. Spanish IBEX down 1/10 of a percent, the FTSE 100 down 1/10 of a percent. You saw losses stateside of between around 0.6 to around 0.8 of a percent for the S&P versus the Nasdaq, so closing in the red again. Some earnings coming through solid. Tesla a disappointment there, but it is the concerns about the growth trajectory and just how far these central banks have to go that continues to weigh on these markets. The Spanish IBEX is flat. Let's switch it over then and see how things are shaping up as we look to the future stateside, but also, of course, the pound in focus given the political chaos that continues here in the UK. Future stateside pointing to further losses then of 0.2 of a percent. The pound is at 112. That's a gain of 0.1 of a percent. We'll break down that story for you around the political chaos and whether it's becoming endemic now within the body politic of the UK. The 10-year stateside 415. Currently, that's a move of just 2 basis points higher for the 10-year. And iron ore 89. 228, 2.28% lower. The context is it's on its longest route now, iron ore, since 2021. Demand, of course, and the property sector route in China is playing into the softness that you're seeing in iron ore, and that continues down 2.3% this morning, Francine.
Tom, I have to say the politics in the UK, absolutely crazy. I mean, these are also MPs from their own party. So actually, if you think about it, with friends like that, who needs enemies? I'm looking at stocks overall and industry groups, energy, banks, auto parts, a little bit on the upside. Energy, the biggest gainer, 1.5% higher. And then you have real estate, telecom, financial services on the way down, 0.6 of a percent lower. It's all about inflation. And again, what will the Fed do? What will a lot of these central banks do? Let's get over to our Bloomberg MLive managing editor. He's Mark Cudmore. And Mark, today you're actually looking at China.
Yes, good morning, Francine. It's actually Hong Kong stocks. I want to focus on my worst call of 2022, which is around this point here. I said that Hong Kong stocks were one way to play a bullish take. As you know, I've been pretty bearish all year on kind of global risk assets. I thought yields are going to go much higher, stronger dollar, but I thought the one market that might outperform was Hong Kong stocks. Because at this point, could they fall much further? Well, yes, they can. They fell another 20%. So that was really one of the worst calls ever. I'm revisiting it because this is a bit embarrassing given how wrong I've been, but I'm going to reiterate, can they fall much further from here? Let me show you another chart, which is valuations. They're at the lowest level, by the way, since 2009. But let me show you the valuation chart, which is the Hong Kong on a PE basis. This is the lowest ever valuation, going back to the full history, back to 1993 of our data there, 6.1 PE. Now, we get really excited when the S&P 500 is around 15 PE. This is incredibly discounted, but of course, it's been incredibly discounted for a couple of years, and it keeps on falling lower and lower. It's way down again today. Now, this is a backward-looking PE, so let me show you one other valuation chart, which is a blended forward 12 months PE. This is now at a very discounted level, but it's not at multi-year lows. And I think that's an important disclaimer here. It's not even at the pandemic lows, so that's back in 2020. It was lower when that kind of flash crash back in February. We were much lower in 2008. So this is kind of saying, hey, maybe it's not overly stretched yet. Maybe it could go a little bit further. But certainly, this is a level where it's never sustained down here for long. So at the risk of repeating my worst era of 2022, I think this market is just falling too far, too fast, and I think it can outperform for the next year, and I'm going to look really, really sheepish when I'm having this same conversation in 6 months' time, and it's 20% lower again.
I love it, Mark. Unpicking and unpacking your worst call, as you characterise it, for 2022. We'll see how that plays out. The HSI currently in the session down 1.7%. Mark Cudmore, of course, our managing editor for MLive. Let's check in on the gilt markets then. Selling pressure across UK debt this morning as we weigh up further. It's hard to say, isn't it? Further, it just gets worse. The political chaos here in the UK, but the selling pressure across gilts, you're seeing at the 2-year, 355, that's a move higher in terms of yields by 4 basis points. The 10-year yields up 8 basis points, and the 30-year, you're seeing a move higher by 7 basis points, currently at 4.06 for the longer dated UK debt. It has been then a day, an evening really, of political turmoil in the UK, with Liz Truss's premiership looking close to imploding. Prime Minister's questions, opposition Labour Party leader Keir Starmer laid out a list of government U-turns.
2-year energy freeze, gone. Tax-free shopping, gone. Economic credibility, gone. And her supposed best friend, the former Chancellor, he's gone as well.
Okay, let's bring in Bloomberg's Lizzie Burden. Lizzie, gilt selling off. Where does all of this, the political chaos, where does it leave the Prime Minister?
Well, Tom, there's huge pressure on Liz Truss to quit. Until yesterday, the consensus seemed to have been that they'd at least let her cling on until the Halloween budget. Apart from the weather, it very much feels like that morning when Boris Johnson woke up and realised he needed to write his resignation speech. The question is whether Liz Truss has the self-awareness to do the same, because throughout the day yesterday, she added to Keir Starmer's list of what has gone from her premiership. Gone is yet another holder of one of the great offices of state, Suella Braverman. Gone is her economic strategy, leaving her only connection now to her core vote as Brexit. But in her cabinet, the replacement for Braverman is someone who voted for Remain, who voted for Rishi Sunak to be the leader, and gone as well is the party's dignity. Backbench Tory MPs last night were livid, frankly, because of the chaos that ensued on the vote on fracking last night. There were allegations that an MP was manhandled by 2 senior ministers, although he and they denied it. So Liz Truss is desperate. It seems that she's doomed, and if she goes today, she would be Britain's shortest-serving Prime Minister.
Lizzie, thank you so much. Lizzie Burden there with, actually, I don't know where there's so many leaves out there, Tom. I've never seen Downing Street like that before. Maybe some already on strike.
But the rain is coming down, the clock is ticking, arguably, on the Prime Minister. I think the key question is, to what extent is this now endemic, this political rupture and disconnect we're seeing in the UK? Is it short-lived? Can they address it? Or is this now structurally baked in to the body politic of the UK?
I mean, I don't know how it can be short-lived. I mean, something at some point has to give. I guess we're comparing it more and more like Italy, so I think I'm like now the political authority on all things UK. Let's bring in Bloomberg's Christina Kino and global market strategist at JP Morgan Asset Management, Hugh Gimber. Thank you both for joining us. Hugh, it does feel like, you know, amongst all this political turmoil, which frankly is pretty, crazy to watch, because we feel that the Prime Minister is safe and then something happens as big as it did yesterday. The market seemed to look through it and go back to the basics of how the BOE fights inflation.
They do. I mean, the big story from the market yesterday was that inflation print yesterday morning. I think it offers a reminder of the context really before all of this political chaos started to take place, in that inflation is running hot. There's massive pressure on the Bank of England. I think, if anything, what's changed over the past 24 hours is markets looking ahead to that 31st of October date, where we are expecting a much more coherent budget plan from the current government. And so if you look at that, you say we've only got 11 days until that point. The new Chancellor was really buying time when he spoke earlier in the week. He was saying, look, we are walking back and I will be coming back to the market with much more information. I think now it looks difficult to see how you could shift a prime minister and still commit to that 31st of October date, which might be why we're seeing a little bit more volatility in bond yields this morning. Ultimately, the Bank of England is left in a very, very challenging position here. On the one hand, trying to keep an eye on the bond market and ensure that gilt yields don't spike too aggressively, while simultaneously trying to demonstrate that it is credible in tackling inflation.
Yeah, so uncertainty, Hugh, around that key date for markets at the end of the month, of course, and spelling out that fiscal plan and, of course, the OBR's role. Christine, I want to bring you in this one, and I want to go back to that question as to whether or not markets need to now start to price in structural political risk here in the UK.
Well, Tom, I think we're starting to see signs of that already. One incredible metric that we've seen so far in these crazy markets is the fact that gilt traders are leaving the market in droves. One measure of activity trading in the UK 10-year bonds, for instance, is now at the lowest level since 2020. And so we are seeing that sort of endemic impact here in the markets. And, I do note that it has been relatively calm. We haven't seen the gyrations akin to what we saw in the aftermath of the mini budget, yes, but systemically we are starting to see the markets kind of shift, and you can understand investors who really don't want to deal with a political chaos akin to Italy, as you say, Fran, just holding up their hands and saying, you know what, I think it's time for me to just call it good here. I'm done with the UK gilt market and I'm out.
But do you agree with that? This is something endemic in UK politics that will last for years to come, or is it just a blip because the government and maybe the Tories have been in power for so long it's difficult to come up with new ideas?
I think the challenge for the market at the moment is that if you're trying to look forward to the potential for an election, you still don't have very much sight as to what the policy of a changing government might imply. And so I think gilt traders are struggling really to assess the fiscal sustainability of the UK over the next 3 to 5 years, regardless of who's in charge. I think visibility on that is still pretty light at the moment. What I would add is I think there is already now a significant amount of risk premium built into UK gilt markets. So yes, we've seen yields decline since the U-turns earlier in the week, but we're still well above where we stood at the start of September. And so for me, I think we can answer that question by saying, look, that has been built in now, and I think that is here to stay. It's going to take a long time for the UK government to regain its credibility with the bond market.
So that risk premium will stay baked in for some time, Hugh. You nodded to this in your first answer when you talked about the BOE. What are the risks of a policy mistake from the Bank of England, given just how much uncertainty there is on the political front, but again the dynamics around inflation as well?
I think it's high. I think when you look at the challenge the Bank of England faces, it's really twofold. One is that their inflation problem is getting bigger and bigger, and therefore they're going to have to step up at the start of November and hike rates aggressively. I think 75 basis points at that meeting is really now the bare minimum that the market will accept. I think there's a clear risk that they feel actually a 100 basis point move is more appropriate at that point. And then as you move through the subsequent meetings, still the bar is pretty high now for the Bank of England to send this message that they are serious in getting inflation, not even back to target, but at least heading in the right direction. At the same time, they then have this financial stability concern. We've seen issues with UK pension funds over recent weeks. And so the Bank of England may be saying, yeah, we plan to start gilt sales in early November. I actually think it's going to be very difficult for them to keep going with that. Why does the Bank of England really need to shrink its balance sheet that aggressively? It's really only a story of trying to build up its credibility for the next time it turns to QE. And so I suspect that what we're seeing in the UK is really a model for what we'll see in other countries around the world over the coming months, where rate hikes are the primary tool for fighting inflation, but actually plans to shrink the balance sheet are shrunk back themselves. I think gilt sales are going to be very, very difficult in this environment.
Okay, very interesting. You don't see QT starting anytime soon. Hugh Gimber stays with us, global market strategist at JP Morgan Asset Management. We'll get views on the Fed and the rest of these markets as well in the next few minutes. And Christina Kino, of course, thank you for walking us through some of the key themes and, of course, how we start to assess this political risk here in the UK. Just briefly checking in on the stocks that are on the move this morning. We had a flurry of earnings, of course, the likes of Ericsson coming through with a miss. You see the stock there down more than 12% on those disappointing earnings. Nokia, of course, another maker of telecom equipment, down 4% just in the first few minutes of the open. Volvo, the truck maker, that is, down around 4%. I'll just get the top line for you in terms of Volvo's earnings. Operating profit actually rose, lifted by a backlog of what they see as truck orders. They see demand holding up. Nonetheless, investors selling off potentially on the back of what's happening in terms of inflation and that weaker economic outlook. Down 4% for Volvo. Francine.
Now, coming up, St. Louis Fed President Jim Bullard sees an end to aggressive rate hikes early next year. Exclusive interview is coming up next, and this is Bloomberg.
Everybody want to be a consultant, and what are all these consultants doing?
Well, David, I think that we actually defy the label consultant, because sometimes consultant seems to imply that we only give advice. And when you look at what Accenture does, we're really different than the traditional version of a consultant. We're really about relevance and results, and that's what is driving our business.
What about a consulting project? In my example, I'm the CEO, I have a problem, I call you up, I say, solve my problem or give me a solution.
We don't operate as big companies permanently in crisis mode. And so when you think about, like, how long does it solve things, a lot of it starts with, you know, the company being willing to set aggressive goals. And so what we are trying to do now is work with our clients to work differently and to work faster.
The difference between missed opportunity and actionable intelligence. For in-house attorneys who strive to provide superior counsel and strategic advice, Bloomberg Law offers an unmatched platform of analytics tools and business intelligence. All to help improve productivity, mitigate risk, and inform decision-making. For the comprehensive platform that helps you work smarter and faster, the difference is Bloomberg Law.
Everything you need to get set for the start of U.S. trading. Bloomberg The Open with Jonathan Farrell. Drilling down on the numbers and preparing you as only Bloomberg can. Weekdays on Bloomberg.
This is a market that over the past few weeks has made it clear it wants to go higher. It got a little spooked by the idea that geopolitical tensions are rising.
We're data dependent, and we're watching the data. I think we're predicting, or at least the dot plot is predicting, that inflation will come down. It will be a disinflationary year in 2023. The median dots do call for further moves in 2023. So if you take that as the committee sentiment, you know, there could be a decision to move that into 2022 at the December meetings.
That, of course, St. Louis Fed President James Bullard there. He sees an end to the front-loading of aggressive hikes by early next year. The Fed has struck a cautious tone in its beige book as it noted that the U.S. economy grew modestly with the risk of recession rising. Hugh Gimber, global market strategist at JP Morgan Asset Management, still with us. Hugh, I'm interested by these Bullard comments as a question and how you look at possibly an entry point for those on the sidelines at this stage. If one of the previous hawks within the FOMC is looking at maybe a pause in 2023, is that an opportunity for those on the sidelines?
I think the big change here is that the Fed needs to start to bring growth considerations back into their mandate. At the moment, the message has been very clear throughout 2022, which is, frankly, we will do whatever it takes to bring inflation down. And if that means that we weaken the economy, then so be it. If anything, they want to weaken the economy in order to try and get inflation under control. So at this stage, you look at the Fed and think, what data really matters to them? Well, it's headline inflation. That is the print. They want to get inflation down. And aside from that, they don't worry about weakening the labour market. They don't worry about slowing down activity. As we move into Q1 next year, I think that should start to change, provided that the Fed is seeing enough encouragement that inflation is trending lower, still nowhere near target, but at least going from sort of 9 to 8 to 7, rather than the 7 to 8 to 9 world that we've been in over the past few months. That, I think, should give the Fed enough confidence to pause in Q1. And that's where markets can start to look at the terminal rate and say, right, I now feel more comfortable about where the Fed is going to stop. Until you know that, it's very difficult to price risk assets. So I think that kind of growth consideration is what we need back on the table to get the terminal rate right, and then start to think about risk assets looking more attractive.
So Hugh, first of all, would this be a hawkish policy error by the Fed because it's unwarranted, or actually is inflation the worst thing in the world? If it's out of control, and so central banks, it's better that they're hawkish now and then deal with the consequences later. And what does it mean for your exposure to stocks?
Yeah, so the politics of inflation this year has clearly been really difficult for the Fed. We've been in a world where the message has been people are living paycheck to paycheck, therefore we have to bring inflation down. I think the politics of inflation will change next year, because if we do start to see not only average hourly earnings slowing, but rather the unemployment rate going up, then you start to talk not about living paycheck to paycheck, but rather actually those paychecks starting to disappear for some people. And therefore, I think the Fed's view on inflation next year will look quite different to the one this year, where they've said we've added over 3.5 million jobs to the economy, therefore we can keep hiking without really seeing any consequences of what we've done so far. In terms of the stock market, I think the market now is looking at 2023 and baking some form of mild downturn into the price. You look at how markets have moved well in anticipation of earnings downgrades already. The key is that inflation number coming down, because if inflation is coming down, 5% for the Fed looks to be roughly about the right figure, and then you can start to say, right, I have a clear picture. If inflation doesn't moderate, the Fed's going to have to go through 5%, and you're looking at a much sharper downturn, both for the economy, but then also for earnings as well.
Hugh, thank you so much. Hugh Gimber there, huge calls from him, global market strategist at JP Morgan Asset Management. Now, coming up, Musk promises an epic end to the year, despite Tesla sales falling short of Wall Street estimates. Well, we'll have plenty more on that story next. This is Bloomberg.
Everybody, how are you doing today? Long time not seeing you. I'm placing an order to buy euro. The price I'm looking to buy 0.9770 sorry. Okay, order placed 0.9780, just right here. Stay with me. If you want to copy this trade, please do so. For our clients, we need to buy, and you need to buy euro. Okay. And let's see what's going to happen next. We're holding quite a few positions in euro, so we need to see how this position will affect our closing positions on euro against United States dollar we hold. Okay, guys, I'll speak to you later.
The difference between political gossip and policy intelligence. Bloomberg Government provides our clients with expert reporting, analysis, and public affairs tools that give you the edge in reaching policymakers on the Hill. When you're in the business of influence in Washington, information and connections are the currencies on which you rely. For knowledge you can act upon, the difference is Bloomberg Government.
Welcome back to the Open. 23 minutes into your European trading day. Losses of 0.2 across the benchmark. S&P E-minis, US futures pointing to losses of 0.4%. And the global bond market sell-off is back. Gilts as well, selling off quite strongly. An 8 basis point move higher on the 2-year and a 7 basis point move higher on the 30-year. Let's get back to the earnings story, though. Tesla reporting sales that fell short of Wall Street estimates, citing delivery and production bottlenecks, and prompting Elon Musk to assure investors that demand for his company's cars remains strong.
As our factories ramp, we're looking forward to a record-breaking Q4. So it really, knock on wood, it looks like we'll have an epic end of year.
Well, joining us now is Bloomberg's global autos editor, Craig Trudell. Craig, Elon Musk is never dull. No matter what you say, it's just like always entertaining. So you must have a lot of fun in your job, even if you probably don't see very much. What do we learn about the sales miss and what he's going to do about it?
Well, you heard that was toward the beginning of the call that he, floated this idea of an epic end to the year, and that's very characteristic of him. Where these calls often start with how great things are and emphasis on that. I think what you heard as the call went on, and also when you looked at the numbers, was revenue a little bit short of expectations. There was some hope that even if they missed on deliveries, which we know they did as of a few weeks ago, that perhaps with pricing being strong, that revenue would actually be perhaps come in better than estimates, and instead we saw it come in a bit low. And I think you also heard some caveats after that initial optimism on the call about we do expect to see deliveries continue to grow by 50% a year, but there are some things outside of our control. We'll be a little bit short of that this year. So there was enough there for the bears to maybe sort of, kind of do a little bit of a victory lap, despite the fact that this is a company that is still growing quite a bit.
Yeah, he also talked about a recessionary-like environment in China as well. Right. The stock down about 40% year to date. An attractive opening maybe for some buybacks. Is that something that they could look to?
That's one of the interesting things on the call was Elon. We just talked about how you sort of never know what the guy is going to say. He alluded to the fact that yes, the board has not really decided this. We're kicking it around, but maybe we'll buy back 5 to 10 billion worth of shares. So. It is definitely something that he's entertained more recently. I think he floated it during the annual meeting that maybe it was a possibility. And you've started to hear some of the shareholders who've been a little bit frustrated by the performance of the stock recently maybe call for that as perhaps a way to bring it back up.
Okay, Craig Trudell, always excellent on these Tesla results. After hours, the stock down about 6%, a disappointing set of numbers from Tesla. Coming up, many UK Conservative lawmakers are reported to now want Prime Minister Liz Truss to resign immediately, leaving her leadership hanging by a thread. We bring you the latest. This is Bloomberg.
So as you look back on your career, what would you say is the best investment advice you've ever received?
Probably the best investment advice that I never received, but that I've lived my whole life around, is surround yourself with really good people. I thought about it just today, like I do many times, what makes a great investor? A great investment firm is comprised of people who are optimists and pessimists and realists. because in the intersection of the debates that go across that wide range of personalities is where you find truth. It's part of the reason I'm so focused on freedom of expression. I see it in my own four walls, the robust and fulsome debates around how we commit our capital, what defines a good idea, what businesses to build or pursue. That's what drives the success at Citadel. And I've been very fortunate in life to have always had a group of friends who really push me, who make me better. And here I get to work with 3,500 colleagues who in their ways make me better each and every day. And collectively, as a team, we've had the opportunity to have an incredible impact on the financial landscape around the world.
It's really a reminder, isn't it, just how sensitive the markets are to any commentary about trade. We did see some pressure on the yuan, we did see some pressure on the futures. That is now being reversed.
Welcome back to the Open, everyone. 30 minutes into the European trading day, and here are your top stories. Truss on the brink. The Prime Minister fires her Home Secretary just days after ousting her Chancellor as members of her Conservative Party begin to revolt. Risk evaporates. China debates a cut to quarantine rules, but stocks drop as inflation and growth risks continue to swirl. Plus, a profit miss. Ericsson shares dropped the most since March after the Swedish company's adjusted operating profit misses estimates. So, Tom, if you look at the market, stocks are slipping, yields elevated.
Yeah, indeed. James Bullard, of course, telling Bloomberg that he sees potentially a pause to these jumbo hikes in the early part of 2023. Have to assess the data. So arguably a bit of a dovish tilt there from someone who's known to be a hawk on the FOMC. But nonetheless, you are seeing these losses across European markets shaking up, at least at this stage, for a second day of red on the screen when it comes to the equity markets. And bonds also selling off in a pretty pronounced way as well across the US, but also the Eurozone and here in the UK. The benchmark is currently down 0.3%. Over in Germany, the DAX is off by 87 points. That's a loss of 0.7%. The FTSE 100 down just 0.1%. But basic resources, and we'll have a look at this in more detail, one of the biggest hits in terms of the sectors. Iron ore is part of that mix. Let's switch it over. That demand question around China, the property market slump. Elon Musk, not Tusk, interestingly saying that there are recessionary-like conditions now in China, and iron ore is on its biggest slump since 2021. The last time I checked, down below $90 a ton for iron ore. Energy is currently at the top of the list, gaining 1.2%. Real estate also just about in positive territory. Banks range bound. Every other sector, though, in the red, led by telecoms. And as I say, basic resources down 0.8%. A couple of individual corporates to bring to your attention. Earnings season, of course, and a mixed picture here. So misses for the likes of Ericsson and Nokia. What a drop there for Ericsson, a telecom equipment maker, currently down 13% on the back of the miss on those third quarter earnings. Volvo Trucks came in with profits above the previous quarter, but in terms of the estimates, it was a miss. They still see strong demand for their trucks, despite the conditions, the economic conditions, of course, deteriorating, down 3.7% for that company. Pernod Ricard talking about a share buyback. It was a beat for this company, post-pandemic upside, range-bound for that company, the drinks maker, of course. And Nokia, alongside Ericsson, it was a miss there, down 5% for that telecom equipment maker as well. Francine.
Tom, let's return to the chaotic world of UK politics. It's been a day and an evening of political turmoil in Westminster, with Liz Truss's premiership looking close to imploding. Well, let's now bring in Dean Turner. He's chief Eurozone and UK economist at UBS. Dean, do the markets, does the economy, change depending on who's prime minister at this point, or it's anyways the chancellor that calls the shots?
I think what the markets are most focused on is the outlook for fiscal policy for the time being. So stability in number 10, whilst it would be welcome, I think the key thing to watch at the moment is the policy decisions coming from the Treasury. We're all waiting now for this next fiscal event due to take place on the 31st of October. We'll see if that actually happens or not, given these times of uncertainty. But for me, that's going to be the key thing to watch from here.
Dean, how are you thinking about the inflationary dynamics here in the UK? CPI, of course, coming back to a 4-decade high yesterday, but then, of course, weighing that up against the announcement that the energy support is going to be reduced potentially after April. Where does that leave your forecasts around UK inflation?
I think the near-term forecasts pretty much unchanged. The peak should come within the next month or two. October, I mean, on paper, October should be the peak, but obviously we are seeing other dynamics within the inflation basket. It's notable that food prices were on an upward march again yesterday, so there could be some little variances around that. I would still be expecting that inflation starts to head down as we move into the early months of next year. But you're absolutely right. When it comes to the April and beyond, the revisions to the energy price cap probably do put a little bit of upside pressure on inflation. I don't think it takes away from the general narrative that we should be seeing inflation heading down next year, but perhaps if we were to see that bills do rise because gas prices are elevated at that point, then it probably makes inflation a little bit stickier next year, which again poses another problem for the Bank of England.
Dean, what happens with the Bank of England next? How aggressive do they need to be for the next 3, actually, central bank, MPCs to get inflation under control, or have they just lost the spiral now?
I think it's taken it too far to say that they've lost the spiral here. I would expect that the bank do a hike that's larger than the last hike, as has been indicated. The conditions warrant a larger than normal hike. I'm still looking for a 75 basis point hike in November and probably another 75 basis points in December. Then I would expect the pace comes down a little bit. We can probably move to slower moves, perhaps 25 basis points. But I'd still think that the peak rate for the bank rate is closer to 4.5%, which is still some way below what the markets are pricing. And I think the reason for that is because by the time we get into the early months of next year, it will be quite apparent that the slowdown that's currently taking place in the UK.
Okay, guys, as you can see, position open on euro, just right here. Stay with me. We'll close this trade in profit. We'll hold this trade probably for a couple of days. We will see how far it will go. But if you decided to copy a trade, as soon as the price will go up, try to find the resistance level and place stop loss on it, so you will not lose any money. What we usually do, we usually try to place stop loss after we about 10-20 pips in profit. So we place half of the price. It means if it's 20 pips we're in profit, we place stop loss on 10 pips above our entry price. Okay, guys, stay safe. I'll speak to you later.
Trading around, the 110 level against the US dollar through the first quarter of next year. We should see some recovery thereafter, but really that's going to be a story about the dollar rather than the pound.
Dean, there's so many parallels being drawn between the UK and Italy, so I need to ask about Italy as well. So we have a Prime Minister in waiting, Giorgia Meloni, who had to rebuke Silvio Berlusconi for saying that it's actually Zelensky's fault that Russia invaded. What does that mean for BTPs? What does it mean for this coalition?
Well, look, I think from the market perspective, I think all of us have been somewhat surprised at how stable the spreads have been on BTPs. Look, a lot of that is with regards to the TPI instrument. I think the ECB seems to have brought a lot of credibility with that. As in terms of what it means for forming the next government, look, it's been our expectation that forming this government wouldn't be as easy as many expected once the election result was announced. It's likely that we're in for a few more weeks of volatility there. But I think the key thing is that investors are focusing on is much more looking at the budget and the fiscal position, and whatever happens domestically with the political backdrop, our sense is that you're not going to see much of a deviation from the budget plan that's been agreed or helped laid out by the previous Prime Minister, Mr. Draghi. So, I think markets can take some reassurance from that. And as long as we don't see any deviation from that, then I wouldn't expect to see that we see any big moves in the BTP market.
I mean, that's a lot of as long as. Dean, thank you so much. Dean Turner, Chief Eurozone and UK economist at UBS, joining us this morning. Now, coming up, EU leaders gather in Brussels. On the agenda, sanctions on Iran, protections against energy sabotage. We'll get the latest live from Brussels next. This is Bloomberg.
Of a push have you seen from the Kishida government in terms of green funding?
The Kishida administration has committed to doubling the amount of investments in so-called green technologies. I think we need more than just pronouncements. We need real money backing very innovative startups and innovative companies in this space.
What do you make of Kishida's new capitalism?
Well, I think his framework is reflective of the challenges that Japan society is facing, namely that growth has been present, but growth has not been, of course, evenly distributed. But frankly speaking, it's hard to redistribute income if you don't have much income to begin with. If the government and private sector can work together and collaborate to drive more innovative growth startups, that can really drive the income growth that the Kishida government needs to redistribute.
No one covers the world like Bloomberg.
Because Trustonomics is being dismantled, MPs behind the scenes are asking, what's the point of having her at the top?
Can the strong dollar amplify the world's risks of instability?
Xi Jinping said complete reunification must be realized.
With unmatched reach and resources from more than 120 countries, the moment news breaks, 24 hours a day. Bloomberg, your global business authority. Markets countdown in Europe. From the financial centers of the world, Bloomberg Markets European Close with Guy Johnson in London and Alex Steele in New York. Real-time numbers, real-time analysis. Weekdays.
We'll talk about energy crisis in Europe in a second, but we have some breaking news. Yen weakening through 150 per dollar for the first time since 1990. Remember, 150 is a very big psychological support level. We did hear more and more hedge funds, market participants, traders saying that there is going to be some kind of intervention. Now, that speculation is certainly not helping what the BOJ wants to do, and you've seen it, follow through in the markets with yen weakening through 150 per dollar for the first time since 1990.
Yeah, again, that is the line, of course, where many expect some kind of intervention. It's currently at 149.92, so it's back flirting with those 150 levels. And of course, and you can draw the linkages to what's happening in terms of the bond markets, the sell-off and yields up across the Treasury curve as well. In terms of your benchmark 10-year, 417, that's a move higher by 8 basis points. Here in the UK as well, more pronounced in terms of the sell-off, 11 basis point move at the front end. But it's the linkages, of course, between the Fed and the BOJ and that divergence that continues to put pressure on policymakers in Japan. They are seeing higher inflation, though how entrenched it becomes, of course, is going to be a question going forward. Still a big gap between the inflationary dynamics in Japan and many other parts of the rest of the world. Talking inflation, European leaders gather in Brussels this morning for a highly anticipated summit dominated by energy and the war in Ukraine. The meeting comes after the head of the Commission, Ursula von der Leyen, unveiled a sweeping plan to bring down energy prices. To debrief on all of this, we, of course, bring in our Europe correspondent, Maria, today. Maria, there's been a plan of action, of course. Are you getting the sense from your sources that there's actually the political will, the consensus to lock it in and implement it?
What a question, Tom. But yes, that is fundamentally the issue today. There has been now a roadmap laid out very clearly by the head of the commission. Remember, the criticism 2 weeks ago is that there were too many ideas floating around. Now we know that on paper they will talk about this dynamic price cap, the joint purchase, the circuit breaker, and of course all of this coming together with the goal to bring down energy bills. But the Commission, they just lay out the executive action. Decisions come down to European leaders, and these are 27 countries that have to agree on a message. Now, I am being told today that we are far from consensus. The sticking points remain. Remember, when you talk about a price cap, this is something that really concerns and scares the Germans because they worry about the implications that it would have on supply. On the flip side, you have now 17 countries that say we need a cap, whatever way it is, we need something out of this meeting. So I'm being told this is going to get thorny at times. It will be a long summit. I was told, by the way, we'll bring a lot of coffee because you will need it tonight. But come tomorrow, the markets will want to see something. So the pressure is definitely on today.
Yeah, talking about coffee, it's 22% more expensive than it was last year. But leaders, never mind, Maria, leaders discussing the fallout of the war more broadly. So how unwavering is the support for Ukraine? It was pretty shocking or unusual for Silvio Berlusconi to go in defense of Russia.
Yes, Francine, and you nailed this because this is the other big topic happening today in Brussels. Now, there is a recording, of course, that was leaked by Berlusconi. This was a private conversation in which he says essentially that it was Ukraine and President Zelensky that in some ways pushed Vladimir Putin into the special operation. That is the kind of language that Vladimir Putin uses himself. The issue here, of course, is that European leaders want to stick with this narrative that this is almost a battle between autocracy and democracy. That's the way the head of the Commission, von der Leyen herself, has framed this. He says the European Union is in it for the long haul here, but precisely because of that, you have to keep public opinion on your side, and that's the reason why you have to get the energy response. But then, of course, you have the political story here, and this is, well, important. The Italian government, the third biggest economy in the euro area, this is a government that is in the making. This complicates things for Giorgia Meloni, who, by the way, yesterday had a very clear warning to Berlusconi, saying if you don't agree that Italy belongs in the EU and NATO, you're not going to be part of my government. It's that simple. And that takes me to another question, Francine. Is it time we stop comparing the UK and Italy, I wonder, though, this morning? Because to me, one seems more shaky than the other.
I mean, that's also fair. I think they're looking at the median average over the last 10 years, but there are a lot of people. I mean, I wish we had the Economist front cover because it basically talks about Brittany, and you see it more, you know, the UK becoming more and more chaotic, like Italian politics has been over the last 10 years. Tom.
Yeah, I love that. I mean, how do I weigh in here? You're the expert on Italy. But yeah, look, I think this is a question. Is this becoming structural now in the UK, the breakdown in politics? Because the Tory party is not just one party. It's a division around 2, 3 different factions, right? And then the Labour Party, they've papered over some of their divisions, but for how long? And so the questions remain as to just how structural this is. And arguably, a lot of this links back to Brexit.
I mean, I just wanted the chance to talk about Hawaiian pizza. But Maria Tadeo, thank you so much, Maria Tadeo in Brussels for us. Now, the former Italian Prime Minister Silvio Berlusconi has blamed the Ukrainian President Volodymyr Zelensky for pushing Russia into an endless war. That's according to audio obtained by an Italian newswire. Now, it comes as Italy's presumed next premier, Giorgia Meloni, attempted to distance herself from Berlusconi, pledging to maintain support for Italy, for Ukraine. Now, for more, let's turn to Bloomberg's Rome Bureau Chief Alessandro Speciale. So, Alessandro, first of all, we still have a Prime Minister in waiting in Italy with Giorgia Meloni. Will she actually become Prime Minister?
Yes. I mean, the outcome of the elections were clear, but what is at stake now is whether this process will be delayed. I mean, it could be delayed very simply because President Mattarella, who hands the cards when it comes to forming the new government, will ask for Meloni and her allies to sort of clarify their own positions and sort of make up their mind of where Italy wants to stand internationally. And of course, it won't be easy. You won't tolerate any departure from Italy's international commitment to the EU and NATO. But what is even more complicated for Meloni potentially is that if some candidates, for example, Antonio Tajani, the former European Parliament president, was touted in the Italian media to become foreign minister, is from Forza Italia, is from Berlusconi's party. Can he be foreign minister after the things that his boss said? But if they have to reopen that, well, it's a whole can of worms. And it's back to the drawing table for Meloni's coalition, for Meloni's cabinet. It could be.
Yeah,
could
that's really fascinating, isn't it? And it seems to be that this is the long-term play by Putin, is betting on divisions within Europe. You're seeing it in Hungary, of course. The Front National over in France, they are by no means a dead political force. And then, of course, Meloni and this controversy over Berlusconi. This plays into Putin's hands. How do you expect it to play out, though, within the politics of Italy?
Well, Meloni has made it clear that she doesn't want Italy to become, again, Europe's soft underbelly. We know Italy has long-standing ties to Russia. It had the biggest communist party in Western Europe. It had Berlusconi, it has Salvini, who is an avowed Putin admirer. But the question is now, will she be able to deliver it with her own cabinet? It's not so clear right now. President Mattarella starts talking to parties. Meloni could be tasked to form a new government as early as tomorrow afternoon, but we'll see what kind of government it will be. It's still very, very fluid here in Rome.
Okay, Bloomberg's Rome Bureau Chief Alessandro Speciale on the attempts there to form a government. So far, not successful. And of course, the controversy around Berlusconi's comments on Zelensky and Russia. Thank you. Coming up, Chinese officials, well, they are debating whether to relax some of the country's strict COVID-19 measures. We're going to get the details, what it may mean for the world's second largest economy after the break. Stay with us. This is Bloomberg.
Energy prices and a short supply of key chemicals that produce synthetic fertilisers are sending pig, cow and horse manure prices soaring. Even human waste is in demand as farmers hunt for alternatives. Fertiliser helps increase crop yields.
You can see how much moisture is held into this. It's a lot of organic material into the compost, so it breaks down, the manure and the straw breaks down into a friable mix that can be mixed into your soil in the ground and for growing a whole range of different vegetables. Holds the nutrients in, holds the water in, and it really increases the kind of biodynamic profile of the soil.
The recent price spike could mean more farmers going organic for the long term.
Everything you need to get set for the start of U.S. trading. Bloomberg The Open with Jonathan Farrell. Drilling down on the numbers and preparing you as only Bloomberg can. Weekdays on Bloomberg.
Welcome back to The Open, everyone. We are 52 minutes into the European trading day. I think the story, without a doubt, is, of course, this move in fixed income. We're seeing a bit of pressure when it comes to equities, but currency is definitely on the move. Also, yen weakening to 150 per dollar for the first time since 1990. Again, this is a psychological level. We've been watching for that. We slowly saw it weakening. Does it mean that we're going to see intervention? Certainly a lot of speculation around it. For the moment, officials have been holding the line.
Yeah, unscheduled bond buying from the BOJ earlier in the day after that yield curve control was challenged. You saw rates ticking up. Of course, the markets are betting they're going to have to walk away from this. So far, they are in lockstep, it seems, the BOJ and the government on holding the line. But of course, the question is for how long? 149.82 on the yen. Let's get over to what's happening in China now, though. Bloomberg has learned that China is considering whether to reduce the amount of time inbound travellers must spend in mandatory quarantine. This as the country's COVID-0 policy leaves it increasingly isolated from the rest of the world. Joining us now is Greater China Executive Editor John Liu. John, this was a Bloomberg scoop from you and the team over in Beijing. What are the details? What do we know about how officials in Beijing are thinking about potentially relaxing some of these measures?
So right now, the isolation rules for travelers coming in from overseas is 10 days, 7 days in hotel quarantine, 3 days at home if you have a residence here in China. The sort of bureaucrats in the government are debating whether they should cut that back to 7, 2 days in a hotel, 5 days at home doing health monitoring, as they call it. That, though, is probably more important symbolically than it is practically. Those 5 days of monitoring, if you do not have a residence here in China, you would have to do all 5 in a hotel. So foreign travelers coming in from the UK or the US, you would have to do 7 days in quarantine still.
So, John, how much of a game changer, and good morning, is this actually for the economy? At the same time, we're also hearing about a potential shift on the border with the airlines, right? Planning more international flights from later this month.
I think the Chinese government, if anything, is known for gradualism, so step-by-step changes. They are not known for doing big bang openings, and we don't expect that to happen. But if this is going to start step-by-step, the quarantines are going to get rolled back, more flights will be connected to cities around the world, then I think you will see a trajectory of the country and the economy slowly starting to open. And if that does happen, I think you will see a bounce in the markets just because of sentiment, expectations for an improvement in the outlook of the economy.
Yeah, that incremental, cautious approach, John. Another story that you and the team broke for us was this huddle of senior, or at least leading, chip makers with officials in Beijing as everyone tries to get up to speed on the ramifications of these restrictions from the US. What do we know about what officials were concerned about?
So what we know is that the Ministry of Information Technology called in some of China's biggest, most prominent chip makers to discuss how they're going to be affected by the Biden administration's latest restrictions on what technologies Chinese companies can buy. And what we understand is that many of those chip makers are saying those actions are going to have a significant impact on what chips they can produce and what they can look to develop into the future. Obviously, the regulator here is looking at what it can do to support the local industry, but so far have more questions than answers. One thing the regulators are saying, though, is that because China is such a big market for chips, the world's biggest indeed, that is something they can fall back on.
John, thank you so much. Our Greater China Executive Editor, John Liu. In the meantime, European stocks, U.S. equity futures contract also falling, rising bond yields. Investors now concerned that strong inflation and hawkish monetary policy will really slow the global economy. That's it for the European market open. Surveillance Early Edition is up next, and this is Bloomberg.
popular. And if a client came to you and said, look, I'd like some cryptocurrencies in my portfolio, what would you say?
Oh, we've actually been really deep into crypto, deep into learning about blockchain, and all of the new businesses. You know, I would characterize us as crypto learners. You know, we have made a series of toehold investments on behalf of our clients, both in some of the currency baskets as well as with some venture firms that are investing primarily in the crypto area. I think it has the potential to be completely game-changing, but it is still such the Wild West, and it's so uncertain. But it has the potential to completely upend everything.
The difference between missed opportunity and actionable intelligence. For in-house attorneys who strive to provide superior counsel and strategic advice, Bloomberg Law offers an unmatched platform of analytics tools and business intelligence. All to help improve productivity, mitigate risk, and inform decision-making. For the comprehensive platform that helps you work smarter and faster, the difference is Bloomberg Law.
Why do the biggest names in business choose Bloomberg?
That is a great question.
It's a great question.
Great question. Great question. Best question I get all night.
Bloomberg, top experts, great questions.
I am a fighter and not a quitter. I have been honest about the mistakes I have made. But what I don't apologise for is the fact that we have helped households through this winter, through the energy price guarantee.
2-year energy freeze, gone. Tax-free shopping, gone. Economic credibility, gone. And her supposed best friend, the former Chancellor, he's gone as well.
This is Bloomberg Surveillance, early edition with Francine Lacqua.
Well, good morning, everyone, and welcome to Bloomberg Surveillance Early Edition. I'm Francine Lacqua here in London. Here's what's coming up on today's program. Truss on the brink. The Prime Minister fires her Home Secretary just days after ousting her Chancellor as members of her Conservative Party begin to revolt. Risk evaporates. China debates a cut to quarantine rules. Stocks drop as inflation and growth risks continue to swirl. Plus, out of power, Tesla slides post-market as delivery and supply bottlenecks hit third-quarter results. Elon Musk promises an epic year-end. Now, first thing is first, let's check in on the markets. And actually, there's quite a lot going on in terms of BTPs, but also yields not only in the U.S., but in the UK. Now, overall, there does seem to be a focus on the market of inflation, the fact that central banks, once again, will have to fight them really hard, and that will tip the global economy into, if not a recession, a significant slowdown. So we're seeing a lot of pressure across the board. European stocks down 0.5%. Energy is one of the only industries that's really gaining in today's trading session. This is on the back of, for example, Brent 1.3% higher. Now, U.S. Treasury yields holding near recent highs. Again, policy-sensitive 2-year Treasury yield near the high since 2007. That's quite significant. And then the yen also weakening to 150. That's the first time we saw it since 1990. The European map, if we take a look at the difference between some of these countries, the UK pretty much flat, as is the CAC 40 and the FTSE MIB, just a bit more pressure on the DAX, down 0.7%. So it's been a day and an evening of political turmoil in the UK, with Liz Truss's premiership looking close to imploding. At Prime Minister's questions, opposition Labour Party leader Keir Starmer laid out a list of government U-turns.
2-year energy freeze, gone. Tax-free shopping, gone. Economic credibility, gone. And her supposed best friend, the former Chancellor, he's gone as well.
Well, let's bring in Bloomberg's Lizzie Burden. Lizzie, when you look at, frankly, the last 48 hours, does the Prime Minister stay or go?
Well, the journalists are lining up in Downing Street waiting for the podium to arrive outside number 10. The pressure is on for Liz Truss to resign. The winds really have changed since yesterday, when it seemed that most Tory MPs thought they'd let her cling on until at least the Halloween budget. But yesterday afternoon, after Prime Minister's questions, the Prime Minister only added to Keir Starmer's list of what had gone from her premiership the Home Secretary, Suella Braverman, then for a bit the Chief Whip, Wendy Morton, though that resignation was retracted and she's actually just gone into number 10 Downing Street. Then on top of the economic strategy of Trussonomics being gone, now Truss's connection to her core really is only Brexit, but in her cabinet she's surrounded now by Remainers. Braverman's replacement is Grant Shapps. He voted Remain and he supported Rishi Sunak in the leadership election. But crucially gone, according to Tory backbench MPs, is the dignity of the party. They're embarrassed, livid by what happened over the fracking vote last night. There were allegations of manhandling of an MP to get him through the right lobby, although they have been denied by him and those involved. And there was chaos around the voting itself. So Truss is desperate. It looks like she's doomed, and we're really just waiting for who could possibly replace her.
Yeah, I mean, who could possibly replace her is the question on everyone's lips, because you need consensus if they're going to change Prime Minister. How's the market taking all of this, Lizzie?
Well, I mean, if you look at the polling, interestingly, the membership wants Boris Johnson, the population wants Rishi Sunak, but the 1922 committee of Tory benchers probably won't want to make the same mistake they've just made and put it to the membership. They may want to bypass them and just anoint a successor to Liz Truss. The markets seem to be doing okay, although the pound not so well, but that's because, as your former guest Dean Turner from UBS put it, the markets are more concentrated on what the Chancellor's doing, which speaks to who's in charge of this government.
100%, certainly who's in charge of the markets. Lizzie, thank you so much. Lizzie Burden there outside number 10. Now, yesterday, Deputy Bank of England Governor John Cunliffe told the Treasury Committee in Parliament that British politicians at the top of government were the cause of market chaos.
The source, if I can put it that way, of that mini budget, and you could say of that period, I think was ministerial decisions on fiscal policy.
I mean, this, of course, means a couple of things in terms of CPI, in terms of what UK political turmoil means for the gilt market. One of our best stories today is from James Hirai saying, look, the UK's disastrous budget caused traders to flee the gilt market, and there's no sign yet that they're coming back. So let's get back to Lizzie Burden at number 10. What does this all mean for the Bank of England?
For the Bank of England, as I say, it's really all about fiscal policy at this point. But the problem is that Jeremy Hunt has taken away a lot of the sugar rush, which heightens the recession risk, which means that the BOE is going to be conscious again, despite that double-digit inflation print for September that we saw yesterday, of its own potential contribution to a UK recession. And really, the Bank of England governor, though, has made it clear that he is very much focused again on inflation fighting. There was this period of an emergency intervention, but as we've heard in recent days, they are going to get back on with active quantitative tightening, even though not at the long end, so that they can keep an eye on financial stability. But they do not want to be the government's backstop anymore.
All right, Lizzie, thank you so much. Bloomberg's Lizzie Burden there with the very latest. Now, let me just recap some of the things that we heard in terms of UK gilts. I think we have maybe a longer-term chart for gilts. It's very clear that bond futures still today show that investors are closing positions fast, trading activity low compared with normal levels, which basically means that traders that fled the gilt market, there's no sign that they're coming back just yet. Coming up, St. Louis Fed President James Bullard sees an end to aggressive rate hikes early next year. Our exclusive interview next. This is Bloomberg.
everybody want to be a consultant, and what are all these consultants doing?
Well, David, I think that we actually defy the label consultant, because sometimes consultant seems to imply that we only give advice. And when you look at what Accenture does, we're really different than the traditional version of a consultant. We're really about relevance and results, and that's what is driving our business.
What about a consulting project? In my example, I'm the CEO, I have a problem, I call you up, I say, solve my problem or give me a solution.
We don't operate as big companies permanently in crisis mode. And so when you think about like how long does it solve things, a lot of it starts with, you know, the company being willing to set aggressive goals. And so what we are trying to do now is work with our clients to work differently and to work faster.
I do think they will have an impact, and in some ways have had an impact. I would cite the housing market in particular, where it appears that increase in rates has really changed the dynamics there. So that's someplace that I would say there are not long and variable lags. That market anticipated Fed moves that before they were even in train this spring. And so that's a place where we've seen impact right away. But, it's a big ship, and it takes a while to steer the ship. And so the housing market is not the whole economy. So
it certainly isn't. And it's certainly not one of the main things driving inflation now. Of course, prices have fallen. But
rents are important, though.
Well, they certainly are.
Yeah.
They certainly are. And in fact, that's one reason why people are so worried about inflation staying high next year, is that those rents are, the way they are calculated, they're going to spread out over several months.
Yeah, but we're aware of the lags in the calculation, and so we'll take that on board and take a look at that. But yeah, you're right. The core measure of PCE inflation is still in the high fours, and the Dallas Fed trim mean 4.75 or so. So pretty high inflation in the U.S., even if you try to trim out some of the more volatile components. So we're going to have to get that turned around, moving in the right direction, back toward 2%.
So how are you going to do that? What does this mean for the restrictive terminal rate of the September SEP's median target interest rate? 4.4% this year, 4.6% next year. After the latest data, what are your projections now?
Well, if you look at the September Summary of Economic Projections, the so-called dot plot, it did seem that the committee was coalescing around further rate increases at upcoming meetings, even by the end of the year. So that seems to be the base case right now. Most of that has been priced into markets, so I would anticipate that that's having an impact right now. So that's good news if you're trying to get inflation down. But we'll have to follow through on that in the subsequent meetings this year and get the policy rate up to a level where we can put meaningful downward pressure on inflation. I think that's the main goal immediately ahead of us at the committee.
That was St. Louis Fed President James Bullard there. He sees an end to the front-loading of aggressive hikes by early next year. Now we're joined by Kevin Tozé. He is a portfolio advisor and member of the investment committee at Carmignac. Kevin, thank you for joining us. So Mr. Bullard sees a 2023 shift with end of front-loading hikes. Is this wishful thinking?
Well, it's a question of political courage, really, because we know that given the level of unemployment, which is still the key variable which will impact interest rates in the end, to have this unemployment rate moving into non-inflationary levels, this would mean a potential severe, I would say, recession in the US in the area of 3%. for inflation to get back on track to the 2% target. So far, politicians are quite keen on stating that they will do whatever they can and whatever it takes to bring inflation back to 2%. But we know that when times are getting more and more difficult, it will be more and more difficult for them to be courageous enough to move back to this target.
So, Kevin, what does that mean? First of all, where do you expect treasuries by year-end?
Well, on treasury markets, again, there's lots being integrated, lots being factored in. Terminal rates in the area of 5%. That's already a decent level of tightening being priced in. I'd say the main question is, when will the Fed pivot? When if they eventually pivot, and this would be at some point, in our opinion, at Carmignac, around mid-2023. And this puts, again, some pressure on longer-term interest rates, because it would mean that the Fed will be shifting a bit late, and hence it will be weighing on growth and hence weighing on longer-term rates.
So, Kevin, when you look at all of the concerning bad news across the world in terms of valuations, in terms of inflation, a possible recession, where are you putting your money right now?
Well, again, on equity markets, where we prefer to allocate assets is in those parts, I'd say, most recession-resilient part of the equity markets. Healthcare is one. We're having luxury companies publishing today in France, notably. That's another area where we like to allocate assets, those luxury names, which tend to be quite resilient, provided that the recession is not that severe, or the impending recession is not that severe. On fixed income markets, I'd say credit markets are integrating a fair bit of pessimism. We get very decent yields on those credit markets, between 8 and 10% on the, I'd say, most indebted part of the market, whether it's in Euro or in the US. And this integrates, I'd say, or embeds a very high level of default rates, which is, I'd say, unlikely to happen going forward. So that's, I'd say, the two areas where we would be allocate most of our assets these days.
Kevin, when you look further afield, I don't know whether you need to get the dollar call right. It feels like the riskiest position if you feel that it goes down and actually it goes ever higher. What's your take on dollar, and therefore what does it mean for example, emerging market credit?
Yeah, well, so I mean, on the US dollar, there's been several factors helping, and that's clearly it's the best performing assets this year. There's probably more to go on that front. Why that is? Because again, the energy crisis is far from being solved in Europe. There's still this huge Damocles sort of potential gas stoppage in Europe. Another one is interest rates differential, growth differential, and on that front, I mean, if we do expect recession to be hitting the US over the next 12 months, it will likely be coming much sooner into Europe, and that's more likely to happen over the next coming 6 months. So, this would mean that the dollar has further room to appreciate versus the euro going forward.
Kevin, very quickly, when you look at Europe, is now the right time to get in or out of bonds?
Well, again, on credit market, I would say it's a very right time to enter on those markets. Again, we are living through volatile times, to say the least. But you have carry with you when you're investing in those credit markets. And again, on the, I'd say, short-term part of yield curves, whether it's the US or the euro area, there's already a lot being priced in. I'd say on long-term euro rates, I'd be a bit more cautious, because there's still lots of supply coming. There's this natural, I'd say, price-insensitive buyer, which is the ECB, which is going to pull out of the market, and this is likely not going to help, I'd say, longer-term euro rates.
Okay, Kevin, thank you so much. Kevin Those there, a portfolio advisor, a member of the investment committee at Carmignac. Now let's get straight to the Bloomberg. First Word News, here's Leanne Gerrans. Hi, Leanne.
Hi, Francine. Liz Truss's premiership is looking increasingly fragile after a day of drama at Westminster. UK Home Secretary Suella Braverman, who was fired earlier in the day, criticised the Prime Minister and accused the government of breaking key pledges. Tensions came to a head later in a chaotic Commons vote over Truss's controversial plan to restart shale gas fracking, with reports of MPs manhandled into voting with the government. Now, President Volodymyr Zelensky has asked Ukrainians to consume electricity with, quote, awareness tomorrow. This after a grid operator warned of rolling blackouts because of damage to the country's power infrastructure from missile attacks by Moscow. Russia, meanwhile, has extended martial law in 4 occupied areas of Ukraine, limiting civilian movements. Bloomberg has learned that China is considering reducing the amount of time inbound travelers must spend in mandatory quarantine. This as the country's COVID-0 policy leaves it increasingly isolated from the rest of the world. Bureaucrats are looking at cutting quarantine to 2 days in a hotel and then 5 days at home, down from a total of 10 days of isolation at present. And French President Emmanuel Macron has used a fast-track decree to push through his budget, effectively bypassing the lower house of parliament. This after the bill was debated in France's National Assembly for several days, during which it became clear it wouldn't secure enough votes to actually pass. Macron's centrist group is nearing 40 seats short after losing its majority, and that was earlier this year. Global news 24 hours a day on air and on Bloomberg Quick Take, powered by more than 2,700 journalists and analysts in more than 120 countries. I'm Leanne Gerrans. This is Bloomberg. Francine.
Leanne, thank you so much. Coming up, Tesla sales fall short of Wall Street estimates, but Elon Musk tells investors the end of the year will be epic. We'll take a look at the numbers, and this is Bloomberg.
China's military power has been growing at an incredible speed over the last 20 years.
A strong country must have a strong military, as only then can it guarantee the security of the nation.
In terms of sphere of influence, we absolutely know that China wants to be dominant in Asia. So there is a target to get to that point, to be a military that is a peer to the greatest militaries in the world by 2035.
The competition for influence is a global one. And through a multi-decade trajectory fueled by planning, money, and pragmatism, China is building a military that allows it to shape the 21st century just as the U.S. shaped the 20th.
You've got to explain this one to me. What does it mean when the White House says we're watching markets carefully?
It means they have a Bloomberg.
I've seen the Bloomberg.
They have.
I've been in and seen it.
Lots of Bloombergs. Lots of Bloomberg. Lots of Bloomberg. Lots of Bloomberg. Lots of Bloomberg. Lots of Bloomberg.
I've seen the Bloomberg. I've seen the Bloomberg. I've seen the Bloomberg. I've seen the Bloomberg. What does it mean? What does it mean? What does it mean? What does it mean? What does it mean?
It means they have a Bloomberg.
Economics, finance, politics. This is Bloomberg Surveillance Early Edition. I'm Francine Lacqua here in London. Now, Tesla has reported sales that fell short of Wall Street estimates, citing delivery and production bottlenecks and prompting Elon Musk to assure investors that demand for his company's cars remains strong.
As our factories ramp, we're looking forward to a record-breaking Q4. So it's really, knock on wood, it looks like we'll have an epic end of year.
Well, joining us now is Bloomberg's Global Autos editor. He's Craig Trudell. So, Craig, good morning. Thank you so much for joining us again. So, how serious are demand issues for Tesla?
So we entered this this earnings report with that being the real big question, right? There was kind of a troubling deliveries report just a few weeks ago, much shorter of pretty much everybody's estimates, concerning that production exceeded deliveries by about 22,000 vehicles, which is sort of unprecedented for Tesla. They usually sort of clean out by the end of each quarter. And you heard the knock on wood there that sort of allowed for, hey, maybe some things could still go astray in the fourth quarter. You also heard later on the call the CFO sort of allow for the idea that we should expect that again in the fourth quarter, more production than deliveries, more cars in transit at the end of the quarter. You also heard Elon Musk talk a little bit about, he did allow for the idea that demand is a little harder to come by because of economic headwinds. So this wasn't necessarily the effusive ebullience that you would have hoped if you were sort of rooting for Musk putting the demand concerns, putting them to rest.
Yeah. So very quickly, is a share buyback possible?
Interestingly, Musk said that this is something that has not been decided by the board, but that didn't stop him from sort of floating the idea that something like on the order of $5 to $10 billion share buyback could be possible. So that may be some way to sort of put some concerns to ease about what the stock's been doing lately.
Craig, thanks so much. Craig Trudell there with the very latest on Elon Musk. Now we're joined by David Hunt. He's the chief executive of PGIM, which has more than $1 trillion in assets under management. We'll get his thoughts on the market outlook. That's coming up next, and this is Bloomberg.
Of a push have you seen from the Kishida government in terms of green funding?
The Kishida administration has committed to doubling the amount of investments in so-called green technologies. I think we need more than just pronouncements. We need real money backing very innovative startups and innovative companies in this space.
What do you make of Kishida's new capitalism?
Well, I think his framework is reflective of the challenges that Japan's society is facing, namely that growth has been present, but growth has not been, of course, evenly distributed. But frankly speaking, it's hard to redistribute income if you don't have much income to begin with. If the government and private sector can work together and collaborate to drive more innovative growth startups, that can really drive the income growth that the Kishida government needs to redistribute.
The difference between missed opportunity and actionable intelligence. For in-house attorneys who strive to provide superior counsel and strategic advice, Bloomberg Law offers an unmatched platform of analytics tools and business intelligence. All to help improve productivity, mitigate risk, and inform decision-making. For the comprehensive platform that helps you work smarter and faster, the difference is Bloomberg Law.
The markets count down in Europe from the financial centers of the world. Bloomberg Markets European Close with Guy Johnson in London and Alex Steele in New York. Real-time numbers, real-time analysis. Weekdays.
Truss on the brink. The Prime Minister fires her Home Secretary just days after ousting her Chancellor as members of her Conservative Party begin to revolt. Brisk evaporates. China debates a cut to quarantine rules, but stocks drop as inflation and growth risks continue to swirl. Plus, out of power, Tesla slides post-market as delivery and supply bottlenecks hit third quarter results, but Elon Musk promises an epic year end. Well, good morning, everyone, and welcome to Bloomberg Surveillance Early Edition. I'm Francine Lacqua here in London. Now, the news cycle, relentless, especially relentless at this moment, from the mayhem in Downing Street to earnings season next week. But my next guest likes to look at the long-term picture for the markets. Well, David Hunt is president and chief executive of PGIM, which has $1.3 trillion in assets under management. He joins me here in the London studio. So, David, welcome to London.
So nice to be with you, Francine.
And welcome to of course, our studio. When you look at inflation, David, this is the biggest concern for asset managers, for private equity, really for any kind of investor, and the people also that are trying to make ends meet. How will this end?
Well, I think that the first thing to recognize is that actually it's very different around the world. It's easy to kind of extrapolate maybe from your home country, but in China, for example, inflation is not a big deal and the economy is shrinking. In Japan, inflation is not a big deal and there's almost no growth anywhere. In the US, we have high inflation, which is pretty broad-based. And in Europe, we have high inflation, but which is more targeted toward energy and food and a few others. So it's a very different story. And I think it does lead you to different conclusions about how things begin to come undone at the end of this. Personally, I think we're headed into a kind of post-COVID regime, which is very different. It will be higher inflation. It will be still fairly low rates by historical standards, and unfortunately, we'll go back to somewhat of a low growth phenomena in the developed world.
So what does it mean, your offerings for your clients, how will they change? Because it's going to be much more difficult it's going to be much more difficult to make money, but it's easier maybe to lose money in this kind of environment.
Well, yes and no, and this is where it's a wonderful thing to be a long-term investor. While it's undoubtedly true that if you were a big holder of bonds at the moment and rates went up on you like that, you're feeling a little bit poor. But in truth, over the next 18 months, the money that we put out, we think is going to be some of the best money, actually, that we invest. This is what happened after the GFC. I mean, we now have an entry point, and we can talk about when that is, but there is an entry point now, I think, to put money to work at far more attractive terms than we've seen over the last 5 years. So I think there's real room for optimism for long-term investors, but you've got to be able to ride this out a little bit.
Right. So first of all, how do you not catch a falling knife? And so what is the right entry point?
Well, I think that is the million-dollar question for sure. And for us anyway, what we're really watching is the rates of inflation and trying to figure out when those are indeed coming down. And you can see some early signs. I mean, the base effects will naturally bring these down for sure. But I do think inflation is likely to stay higher than the market anyway believes that they will. And the reason for that is actually how much money has been put into the economy by fiscal stimulus, whether that's here in the UK or in the US. We've had more than 10% of GDP pumped into consumers and businesses' wallets. And they're spending that, and there's a lot of momentum behind it.
But do you worry about zombie companies? And to your point of actually putting capital to work, can you demand higher fees in this volatile environment?
So there's no question that a lot of the money that has gone into the economy for COVID has meant that the natural process of creative destruction probably has been delayed a little bit. And I would say we're going to see that more in Europe than the US, where much of the support actually went to unemployment insurance, whereas much of the support in Europe actually went into companies. But nevertheless, I do think gradually you will see the kind of creative destruction. You will begin to see, as we head into recessions, that there will be a rise in credit losses and defaults. And that's a natural part of beginning to get demand under control. And central banks want that.
But nothing like an 07, 08 crisis.
Actually, very different. I think the analogies are not that helpful. The GFC was fundamentally a liquidity issue that was driven by banks that were undercapitalized. We actually have the opposite problem now. The banks are in very good shape. The GFC was not really a credit issue. This, I think, if we have kind of a mild to moderate recession, at least in much of the developed world, which will be driven by higher rates, you're going to have actually more of a credit issue than we did before, but I don't think you're going to have the same kind of liquidity issue.
I mean, if you look at some of the credit issue, I mean, there was a bit of liquidity concern for some of the pension funds, the longer-dated pension funds here, which I'm sure you follow very closely.
Very.
A couple of concerns, of course, with shadow banking. How do you stress test, leverage companies at the moment that are okay at 1% interest rates, not so much at 5%?
So I'm really glad you raised the leverage question, because whenever the question of kind of where should we worry, what's going to break, the answer to that is almost always follow the leverage, because that, oftentimes driven by the use of derivatives, is in fact where you see things that people thought were relatively tame, all of a sudden with fast moves in prices, can't make margin calls. And that's what you saw in the gilts market here. And that's what we saw actually, a couple of years ago in the U.S. government's market. Yeah. So we're watching those markets that have built-in leverage very carefully.
To what? Get out or
no? Just
or
to monitor what the leverage situation is, to make sure, one, we have enough liquidity in our portfolios so that clients can move in and out when they want, and secondly, of course, that we do have dry powder that if prices moved dramatically lower, that we could actually move in force for sure.
David, are you here to do business? I wonder what you make of all the political turmoil, and we mentioned the pensions, but also yesterday was a pretty extraordinary day for the UK.
No, it really has been absolutely an amazing week to be here for sure. And I'm sure you need yet another kind of commentator on the UK political situation, but I can say that markets are very clear about what they expect. And that at these heightened levels of interest rates, having big unfunded liabilities by the government is really not going to be acceptable. And I think that was sternly delivered here by markets, but that should be watched in the U.S. and in other markets. Italy comes to mind, where for sure the same kinds of problems exist. Yeah. So I think this has been a very important week for the world to watch.
David, what are you most optimistic about? I mean, we do, there's a lot of things that could go wrong, and we talk about this day in, day out. But for the chief executive of such a, respected and large company like PGIM, are 2-3 years, will we be in a better place than we are now, or are there opportunities for you?
So I remain extremely optimistic as an active investor. I mean, I really do think that at these levels of prices, that as we go through the recession, we hit the bottom, of course, the markets will come back faster than the real economy. We will actually see really terrific buying opportunities. By any measure right now, rates are too high, spreads are too wide, and the real question for many of us is when to make that move, not whether, because I think the next 24 months will actually be very attractive, and people should be optimistic as long as they have a long-term view.
But are your clients optimistic, or have they been afraid? They haven't been trying to...
No, and we've seen one of the biggest differences, I think, that I can remember between institutional investors who have not changed their SAA. There's been no panic whatsoever. In fact, many of them have been selectively kind of rebalancing into this. And retail, where you have seen a lot of big outflows and people just kind of running from anything that said fixed income. But the two are very different. And so I think most long-term investors are riding this out and feel as if they have, you know, an opportunity now in front of them.
But how difficult is it, for, you know, to go from what we've lived through in the last 12 years to the next 10 years with you know, QT, with central banks just taking on a completely different role? It
really is. I mean, so I mentioned this kind of new regime. And so what we're working the most with clients on is, so if inflation is higher, what does that mean for your portfolio? If rates are going to be a bit higher, what does that mean? If emerging markets no longer really operate as a block, you know, how do you break all of that up? So it's a very interesting time to be an investor.
Yeah, certainly not dull, David. Thank you so much for joining us today. Come back soon to London and here on air. David Hunt there, President and Chief Executive Officer of PGIM. Now, in the meantime, let's also check on Pound. We probably need to also check on gilts. The focus is on the politics. Now, we did hear from Mr. Broadbent of the Bank of England. It's not clear if rates must rise as much as markets see. Remember, it is November 3rd that we have the Bank of England decision. It's on October 31st that we're expecting more details from the Chancellor in terms of fiscal spending. But then, of course, $1 million question is, does the Prime Minister stay? What comes if she goes? And how does that change the fiscal equation? Now let's get straight to your Bloomberg Business Flash. Here's Leanne Gerrans. Hi, Leanne.
Hi, Francine. Hermes sales have surged as luxury shoppers in China return to stores after COVID restrictions eased, snapping up Birkin and Kelly handbags. Revenue rose 24% in the third quarter, excluding currency swings, topping analysts' estimates. The results provide more evidence that producers of luxury goods remain mostly immune to the wider squeeze on spending. Now, Philip Morris has increased its offer for smokeless tobacco company Swedish Match. The total value of the revised offer from the Swiss-based tobacco giant amounts to about $15.8 billion. A takeover would give Philip Morris a vast distribution network over in the US, the world's largest market for smoking alternatives. It says it will not increase the price further. And Bloomberg has learned Saudi Aramco is pushing ahead with plans for an IPO of its oil trading business in what would be one of the largest listings this year. Sources say the firm is working with advisors for a listing in Riyadh as early as this year, which could value the unit at more than $30 billion. And that's your Bloomberg Business Flash. Francine.
Thanks so much, Leanne. Now, coming up, EU leaders gather in Brussels on the agenda, sanctions on Iran, protections against energy sabotage. That's up next, and this is Bloomberg.
Cryptocurrencies have been very popular. And if a client came to you and said, look, I'd like some cryptocurrencies in my portfolio, what would you say?
Oh, we've actually been really deep into crypto, deep into learning about blockchain, and all of the new businesses. You know, I would characterize us as crypto learners. You know, we have made a series of toehold investments on behalf of our clients, both in some of the currency baskets as well as with some venture firms that are investing primarily in the crypto area. I think it has the potential to be completely game-changing, but it is still such the Wild West, and so it's so uncertain. But it has the potential to completely upend everything.
The difference between political gossip and policy intelligence. Bloomberg Government provides our clients with expert reporting, analysis, and public affairs tools that give you the edge in reaching policymakers on the Hill. When you're in the business of influence in Washington, information and connections are the currencies on which you rely. For knowledge you can act upon, the difference is Bloomberg Government.
Economics, finance, politics. This is Bloomberg Surveillance Early Edition of Francine Lacroix here in London. Now, European leaders gathered in Brussels this morning for a highly anticipated summit dominated by energy and the war in Ukraine. Now, the meeting comes after the head of the Commission, Ursula von der Leyen, unveiled a sweeping plan to bring down energy prices. Now, to debrief us all, we go to our Europe correspondent, Maria Tadeo, who's covering the summit. Maria, great to speak to you again. There's a plan of action, but is there the political consensus to get it done?
Yeah, Francine, and frankly, that is the key question today, and there is no simple answer for it. We've now seen the plan put forward by the head of the Commission. We've talked about this dynamic, very dynamic price cap, the idea of a circuit breaker in the derivatives markets, too. We've talked about the joint purchases, but ultimately, these are ideas that will only fly if European leaders agree to them and give it the green light. Now, I am being told today the sticking points essentially remain. The Germans continue to be very worried about the implications of any cap whatsoever. They worry that could limit supplies, and their priority is to get a hold of supplies. And then, of course, you have this growing coalition of countries that want to see a price limitation being put forward. So, Francine, overall, I'm being told consensus at this stage. A lot can change in 24 hours in Brussels, but right now it does, well, it looks in many ways that this is going to be a long but also very thorny discussion tonight.
Yeah, and to be fair, usually a lot does change in 24 hours in Brussels. Maria, thank you so much, Maria Tadeo there with the very latest from Brussels. Now, the energy crisis forcing governments to rethink how they generate power. One alternative being considered, Turkish power ships. Now, these giants floating power plants are run by Turkey's Car Power ship. They burn fossil fuels and are usually spotted on the coastlines of Africa and emerging markets. But the company says it's now in talks with 4 European Union nations. Well, we're now joined by Zainab Harezi, Managing Director at Car Power ship. Zainab, thank you so much for joining us. It does seem, you know, the idea is not as green as many governments would like it in Europe. The idea may be important just to make sure that we don't have blackouts. Germany, as far as I understand, is now backing off this options. Who are you talking with in terms of governments in Europe?
Thank you very much. As Car Power ship, we have built conventional land-based power plants that are combined cycle, that are dual fuel, inside ships. And we've done this speculatively before any contract so that these power plants can be mobilized in less than 30 days. So these technologies have been used in Europe for the many decades before, and they are no news to the European utilities. The only difference is that they are built inside ships rather than on land. We have been speaking with the leading 4 economies in Europe to provide electricity, and we have been in very mature discussions and hope to have a couple of the ships operating before the winter peak so that we can lower the electricity bills and make sure no industries and no households get blackouts.
Zainab, so who would like to buy this? If you look at some of the economy ministers or energy ministers, is France looking into this? Are they ready to accept and actually use some of the Car Power ships? How much do you think you'll be present in Europe in 6 months from now?
We hope that if we can go through the regulatory processes, which are made for conventional project development, so the standard regulatory processes take approximately 1 year. If we can expedite that process to implement a fast-track solution, we should be able to commission and make readily operational 2 gigawatts of electricity in Europe in less than 60 days from today.
Zainab, when you look at some of, the countries, are you having talks with Paris? Is it something that they'd be interested in? We understand that Germany may not be looking at this option, but that France could be.
We are speaking with all 4 of the leading economies in Europe. They have been requesting us to keep their names confidential for time being, for security of supply reasons. So with your permission, we will respect our potential clients' request, but I would be very happy to share that information first week of December, when hopefully all the power ships will be operational.
Yeah, and for the moment, I understand there are 33 power ships in operation across Africa and other emerging markets. How long are these contracts?
So the shortest contract we have is 1 year, and the longest is 25 years. These ships have a lifetime of more than 30 years, but it is very natural to use the ships for 3 to 5 years with a medium-term contract, and then once understanding the merits of it and how low cost the electricity generated from it and how reliable it is, then provide for a contract extension. That flexibility is not possible with a land-based power plant, since the structure is fixed and it cannot be moved, but we can provide that flexibility with floating power plants.
Zainab, thank you so much. Zainab Harazi, their managing director at Car Powership, joining us this morning. Now let's get straight to the Bloomberg First Word News. Here's Leanne Gerrans. Hi, Leanne.
Hi, Francine. Liz Truss's premiership is looking increasingly fragile after a day of drama at Westminster. UK Home Secretary Suella Braverman, who was fired earlier in the day, criticised the Prime Minister and accused the government of breaking key pledges. Tensions came to a head later in a chaotic Commons vote over Truss's controversial plan to restart shale gas fracking, with reports of MPs manhandled into voting with the government. Now, President Volodymyr Zelensky has asked Ukrainians to consume electricity with, quote, awareness tomorrow. This after a grid operator warned of rolling blackouts because of damage to the country's power infrastructure from missile attacks by Moscow. Russia, meanwhile, has extended martial law in 4 occupied areas of Ukraine, limiting civilian movements. Bloomberg has learned that China is considering reducing the amount of time inbound travelers must spend in mandatory quarantine. This after the country's COVID-0 policy leaves it increasingly isolated from the rest of the world. Bureaucrats are looking at cutting quarantine to 2 days in a hotel and then 5 days at home, down from a total of 10 days of isolation at present. French President Emmanuel Macron has used a fast-track decree to push through his budget, effectively bypassing the lower house of parliament. This after the bill was debated in France's National Assembly for several days, during which it became clear it wouldn't secure enough votes to pass. Macron's centrist grouping is nearly 40 seats short after losing its majority. That happened earlier this year. Global news 24 hours a day, on air and on Bloomberg Quick Take, powered by more than 2,700 journalists and analysts in more than 120 countries. I'm Leanne Gerrans. This is Bloomberg. Francine.
Leanne, thanks so much. Coming up, the British cabinet has become something of a revolving door, and the Prime Minister is under immense pressure to be the next person to leave. We have the latest from the mayhem in Downing Street. This is Bloomberg.
Everybody want to be a consultant, and what are all these consultants doing?
Well, David, I think that we actually defy the label consultant because sometimes consultant seems to imply that we only give advice. And when you look at what Accenture does, we're really different than the traditional version of a consultant. We're really about relevance and results, and that's what is driving our business.
What about a consulting project? In my example, I'm the CEO, I have a problem, I call you up, I say, solve my problem or give me a solution.
We don't operate as big companies permanently in crisis mode. And so when you think about like how long does it solve things, a lot of it starts with, you know, the company being willing to set aggressive goals. And so what we are trying to do now is work with our clients to work differently and to work faster.
No one covers the world like Bloomberg.
Because Trustonomics is being dismantled, MPs behind the scenes are asking, what's the point of having her at the top?
Can the strong dollar amplify the world's risks of instability?
Xi Jinping said complete reunification must be realized.
With unmatched reach and resources from more than 120 countries, the moment news breaks, 24 hours a day. Bloomberg, your global business authority.
Economics, finance, politics. This is Bloomberg Surveillance Early Edition. I'm Francine Lacqua here in London. Now, this is a picture for gilts. Again, there's a move across the board in fixed income, but certainly you can see the 2-year yield, the one that's most sensitive to everything that's happening in the next 2 years, 3.54. So it's been a day and an evening of political turmoil in the UK, with Liz Truss's premiership looking close to imploding. Let's bring in Bloomberg's Lizzie Burden now. So, Lizzie, where does it actually leave the Prime Minister?
Well, my colleagues Alex Wickham and Kitty Donaldson put it well. They described yesterday as not just ideological rigidity, not just political misjudgment, but amateurishness for all the world to see. It was the resignation of Home Secretary Suella Braverman and then her scathing resignation letter. We're going to hear from her with her resignation speech we expect in the Commons later. Then the vote on fracking and all the chaos surrounding the allegations of manhandling to get a Tory MP through the right side of the lobby to vote. The MP involved and the ministers, I should say, have denied that, although there were multiple eyewitnesses. And there was, of course, confusion as well over whether the fracking vote was a confidence vote in the government or not. And that has flip-flopped multiple times. And the chief whip and the deputy whip quit and then unquit. So in sum, Francine, it has been absolute chaos. The pressure is for Liz Truss to quit, and we're just waiting for the lectern outside number 10.
Yeah, I have to say, so many commentators commenting that it's now like Italy and so many Italians being offended by that. In the meantime, the Bank of England Governor Ben Broadbent also saying that it's not clear that UK interest rates need to rise as much as markets are betting at the moment. Our Lizzie Burden outside number 10. Bloomberg Surveillance Early Edition continues. This is Bloomberg.
The 700th anniversary of Dante Alighieri's death has triggered the work of many institutions and offered a very rich schedule of events. Today in Santa Croce, we present one of these projects that suffered a difficult start because COVID-19 has stopped the project that was shared by the Opera di Santi Croce by the Franciscan community from Florence municipality and the Fund for Religious Building of the Internal Minister. Today, Felice Limosani's project is finally enjoyable. In the Pazzi Chapel, the marvelous architecture by Filippo Brunelleschi, the most important images from the Divine Comedy created by the French illustrator Gustave Doré. Through these images, we can live the violent emotions of hell, the weight of purgatory, and the sublime joy of paradise.
The digital humanities are a cultural occasion to exploit. Summing up, it's about merging humanistic disciplines with new technologies. I find this to be an innovating and modern tool to update culture. Cultural heritage becomes something to hand over to the new generations and not to be put aside. So it's about using technology, pixels, and binary code with a human and humanizing content.
The difference between missed opportunity and actionable intelligence. For in-house attorneys who strive to provide superior counsel and strategic advice, Bloomberg Law offers an unmatched platform of analytics tools and business intelligence. All to help improve productivity, mitigate risk, and inform decision-making. For the comprehensive platform that helps you work smarter and faster, the difference is Bloomberg Law.
Everything you need to get set for the start of U.S. trading. Bloomberg The Open with Jonathan Farrow. Drilling down on the numbers and preparing you as only Bloomberg can. Weekdays on Bloomberg.
Clearly, we're in a decelerating environment right now, and the market leadership to us just doesn't make a ton of sense.
FX is a relative game. The dollar remains, first amongst equals in this.
We will not see weakness in the dollar until the other economies start to do either as well or better than the U.S.
I haven't seen enough evidence that there's been any sort of break in the way things function. Yes, we're going through a painful period in the markets.
It's a very difficult environment, right? We're at market-breaking levels in almost every asset class.
This is Bloomberg Surveillance, Early Edition, with Anna Edwards, Matt Miller, and Kaylee Lines.
It's 10 a.m. in London, 5 a.m. in New York, and 5 p.m. in Hong Kong. Our top stories today. On the brink, Liz Truss's hold on the premiership is hanging by a thread as many members of her UK Conservative Party agitate for her to go. Tesla slides, delivery and supply bottlenecks hit the EV maker's third quarter results. CEO Elon Musk tries to assure investors, promising an epic year end. And a sweetened offer, Philip Morris says its new bid for Swedish Match is its best and final as it targets the world's largest market for smoking alternatives. Welcome to Bloomberg Surveillance Early Edition. I'm Anna Edwards in London with Matt Miller and Kaylee Lines in New York. And Kaylee, hard not to be distracted by the politics here in the UK, but away from that, the rising yield environment is still very much in focus.
Yeah, and that is weighing on risk appetite really around the world, Anna. Definitely true in Asia overnight, where stocks were down pretty much across the board. Though what's interesting is the MSCI Asia Pacific Index as a whole cut its losses about in half, only right now down about 0.75% after earlier losses of more than 1.5%. And the reason for the rise off of session lows was some Bloomberg reporting that China may be looking to cut its COVID quarantine measures shorter, potentially just 2 days in a hotel than 5 days at home. So that would be a reduction and an easing of some of the really strict COVID zero protocols there. So that helped things out, but still a down day for equities. Also a down day mostly for bonds, and that yields are moving higher around the world, really seeing follow through upward pressure on yields like we saw in treasuries yesterday in the overnight session, including in Australia, where the 2-year yield rose 12 basis points to 351. That's the highest going back to 2012. And of course, the Japanese bond market has not been immune to these forces. We have seen the 10-year JGB yield once again above that 25 basis point cap that the Bank of Japan would like to keep there, which is why they announced an unscheduled bond buying program to try to keep that yield curve control. And of course, that is contributing to to a weaker Japanese yen. We are on intervention watch because we are very, very close to 150 per dollar, Matt. Right now, dollar yen trading at 149.92. So that's a pair to watch very, very closely.
Yeah, we won't know until we do, and then markets will react very sincerely if that happens. Take a look at what's going on in futures. We are down about 0.5% on S&P futures. Now, of course, Tesla's an S&P stock, but we're watching that, and it's dragged very closely. Tesla on the NASDAQ futures down 0.9%. So you could see tech stocks take a big drop, but just keep in mind how many tech stocks these days are in the broader index. The 10-year yield continues to rise, and really yields across the curve are rising to cycle highs, right? We're looking at 460 basically on the 2-year right now, 416 on the 10-year. And then NYMEX crude up 1 1/3, $1.36, up 1.5%, a little bit more than that, to 86.91. So we do see a little bit of gain there. That may be a little bit of optimism across the oil market as we hear news that China is considering cutting the COVID quarantine time for inbound travelers. Anna, what do you see in terms of the European stock market?
Yeah, we did see that news around China pop oil higher. It didn't keep its impact on equity markets, but some of that pop higher in oil did last, Matt, as you point out. I see a really divergent picture across European equity markets, depending on the sector weighting of these different geographies. So the London market down 0.1% or so. The DAX in Germany really underperforming because it doesn't have the weighting towards oil names. It also doesn't have the luxury assistance that France has today. More on that in a moment. It is the energy sector that is the only one that is going higher across Europe today, and I picked that out as one of the sectors to follow today. Energy markets, then energy stocks rather, up by 1.4%, but that is the only sector moving higher. Everything else moving negative today. This is the 2-year yield. I picked this out for this for the gilt market, of course, 3.54%, and we do see yields going higher. And to Matt's point, this is a global phenomenon. This is something we're watching in other geographies, in Germany and in Italy. For a little time this morning, it looked a little bit nervous, as if the gilt market was going to price in higher yield gains than other markets, but that doesn't seem to have been the case. Now it's sort of on par with the rest of what's going on in Europe. Not all that is similar to what's going on in the German market this morning. And Ericsson is down by 14.7%. The telecom equipment maker, the profits disappointing. They're under pressure from an activist investor. They're also guiding that it's prudent to expect that some of their customers might cut back on spending, given all of the headwinds that they're facing. And Hermes, this is a luxury goods company. It was up much more strongly than this, only up by 0.3%. Not doing as bad as had been anticipated in China is one part of the story. And stop me if you've heard this before. American tourists in Europe with strong dollars spending on luxury items seems to be coming to the aid of the luxury sector. Let us talk about something that's happening here in London. It's been a day and an evening of political turmoil in the UK, with Liz Truss's premiership looking close to imploding. At Prime Minister's questions yesterday, the opposition Labour Party leader Keir Starmer laid out a litany of government U-turns.
2-year energy freeze, gone. Tax-free shopping, gone. Economic credibility, gone. And her supposed best friend, the former Chancellor, he's gone as well.
For more, let's bring in Bloomberg's Lizzie Burden at Downing Street. I mean, that was yesterday lunchtime, Lizzie. Since then, she obviously had that appearance in Parliament. And then we had a really troubled vote in Parliament, really messy, chaotic scenes in the House in Westminster. Where does all of this leave Liz Truss?
Well, Anna, Liz Truss only added to the list of things that are gone from her premiership in the hours that followed Prime Minister's questions. Gone is another holder of one of the great offices of state, the Home Secretary. Gone, of course, is much of her economic strategy, and really her only connection to her core vote now is Brexit, and yet her cabinet is now filled with Remainers. The new Home Secretary, Grant Shapps, voted Remain, and he also supported Rishi Sunak in the summer leadership election. But crucially, gone is the party's dignity. According to Tory backbenchers themselves, they were livid last night because of what happened around the fracking vote. There were allegations of manhandling of an MP by 2 senior ministers to go in the right lobby and vote the government's way. That's been denied by the MP involved and the ministers involved. But still, there are calls from both MPs in the Tory party and the Labour Party for an investigation. So the wind has changed in Westminster today. It had seemed that Liz Truss was going to be allowed to cling on until at least the Halloween budget, but now the pressure is mounting for her to resign today. We're just waiting for a lectern to arrive.
And if that lectern does arrive and she does indeed resign, Lizzie, what happens next? Who would replace her?
Well, interestingly, the polling shows a difference. The party membership would like Boris Johnson to come back, but the population would like Rishi Sunak, who of course lost out to Liz Truss over the summer. He's the former Chancellor. You may see the 1922 committee of Tory backbenchers opting to anoint a successor to skip this very divisive leadership election process that we saw over the summer, bypass the party membership because we see where their decisions lead. But the trouble is, whoever they pick would have a seriously diluted mandate. That would raise this pressure for a general election, and no Tory wants that, given it already looked like the Tories were going to get annihilated at an election. Yesterday's only added to the chaos.
All right, Lizzie, thanks very much. Lizzie Burden, they are reporting from Downing Street. We are waiting for any changes there, and we'll bring them to you the minute they happen. Now, let's get back to the markets. Tesla shares down after the EV maker reported sales fell well short of Wall Street estimates, citing delivery and production bottlenecks. The miss prompted Elon Musk to assure investors that demand for his company's cars remains strong.
As our factories ramp, we're looking forward to a record-breaking Q4. So it's really, knock on wood, it looks like we'll have an epic end of year.
Joining us now is Craig Trudell, Bloomberg's Global Autos editor. So what do we know? I mean, Craig, it looks like Tesla's sales fell about $600 million short of the street's estimates. If you factor in even $100,000 a car average selling price, that's 6,000 vehicles.
Right. I think, there was also some mention of dollar strength playing a part there. I think you also, I think, just have to step back a little bit and do sort of acknowledge that this company is growing quite a bit, right? Revenue did increase by 56%. Having said that, they've really sort of set a high bar for themselves by, the talk along the lines of what we just heard from Musk of, an epic outlook and lots of talk about record-breaking results. This is a case where this is a company that's gone from, 2 car plants to 4 in the course of roughly a year. And so you would definitely expect that they would have record deliveries and so forth. I think that the big concern going into this was that, deliveries fell quite short of production last quarter. They sort of allowed for the fact that they expect that to continue in the fourth quarter. So that, sort of allows that demand concern to fester a little bit. They also expect to come up a little short of their 50% annual growth outlook for this year. And so, they didn't necessarily put totally to bed this concern about demand. And maybe what we'll see in the coming weeks is perhaps some price cuts from the company after many price increases because of all of the material costs and so forth that prompted those increases.
Well, that would be interesting. That would be a pivot in itself. We think about a pivot from a macro perspective, a focus on inflation turning to growth. If we saw that from Tesla, that might tell us something interesting. Elon Musk was talking and acknowledging some of the weak spots in Europe and crucially in China.
Yeah, absolutely. I think he talked about the idea that demand is, and I quote him, a little harder to come by. So I think he's alluded to the idea that the property market in China is a drag. Here in Europe, it's an energy crisis. He alluded to the idea that the Federal Reserve is raising interest rates and sort of clings to his belief that they'll actually have to bring them back down a little bit, which is definitely a sort of contrarian view, I think. But I think he did sort of allow for the idea that demand, while it is strong, it's going to be a difficult environment for them, and that certainly is making it harder than it's been for them in the past.
All right, Craig, great to get an update from you. Thanks so much. We'll continue to follow Tesla this morning, obviously, as the shares look set to fall and could be a big drag on the broader market. Let's get to some big deal news. Philip Morris has increased its offer for smokeless tobacco rival Swedish Match. The total value of the revised offer from the Swiss-based tobacco giant amounts to about $15.8 billion. Now, a takeover would give Philip Morris a vast distribution network in the U.S. again. which is the world's largest market for smoking alternatives. Bloomberg's Andy Hoffman joins us now. And Andy, this is really interesting because, of course, Philip Morris, you know, that's an American company, an American name. The breakup with Altria just 15 or 16 years ago. Is this going to be enough now to get it back in the U.S.? Are the hedge fund shareholders of Swedish Match going to get on board with the deal?
Good morning, Matt. Yeah, this is the big question. I mean, what we're hearing initially and early on is that this increase to about 116 krona from 106 krona initially should be enough for some to tender. However, the big question is Elliott Investment Management. That's the hedge fund that owns, we believe, more than 7.5% of Philip Morris International. And what they decide to do and whether or not this is enough for them is the big question. We haven't heard from them so far, and so we don't know where they are. Indeed, as you were saying, this is all about getting back into the U.S. market for Philip Morris International as they move to what they call smoking alternative products. And the U.S. is the largest market for smoking alternative products, things like vaping, nicotine pouches, which is what Swedish Match makes. And that's why Philip Morris, which right now is not in the U.S. market, wants to get there.
Well, and on that note, how does this deal with Altria to sell IQOS in the U.S. fit into this equation?
Right. Well, this is also a key move. This is a sort of interesting strategic move by Philip Morris at this point. What it does is it gives them, they're spending about $2.7 billion in this deal with Altria. It gives them access to the U.S. market to sell the IQOS product, which is a heated tobacco product. It's not tobacco that you light on fire and inhale, it's that you heat and it vaporizes. And Philip Morris says that is a smoking alternative, and that is better. At this point, Philip Morris was not able to sell that product. That was Altria's product to sell in the U.S. But this deal will give them that right once they begin manufacturing the IQOS product in the United States. That should be in about 18 months. And it gives them leverage here in the fight with the Swedish Match shareholders, because they say, well, this is our entrance into the U.S. market, and perhaps we don't need Swedish Match if you're not willing to accept this offer, which Philip Morris says is their best and final offer.
All right, Bloomberg.
Andy, thanks so much.
Andy Hoffman.
Apologies, Katie.
Jinx, Anna. Andy, thank you very much for joining us. Now let's quickly take a look at some other company stories we have our eye on this morning, with some stocks moving in pre-market trading here in the U.S., all of them related to earnings that were reported after the bell yesterday. First up, IBM, topping expectations on revenue, plus boosting its full-year forecast, really signals still strong demand, which is helping them contend with dollar strength that a lot of companies are facing right now. IBM up about 3% before the bell. It's also a positive story for Las Vegas Sands, the casino operator. Its adjusted property EBITDA topping expectations. Strength for Marina Bay Sands in Singapore helping offset a still weak Macau. It is up a little more than 1%, but sinking to the downside is Alcoa, the big aluminum maker, posting a surprise loss. They're dealing with higher costs, but slumping prices as well for aluminum itself. So all of that taking down the company's performance and the stock with it. It's down about 9% in early hours. Anna, now it's your turn.
Now it is my turn, and that was definitely worth a mention, so I'm glad we got there. Coming up on the program then, Kaylee, Annika Gupta joins us, Wisdom Tree Director of Research. So much to talk about, from UK gilt markets to the weakness in the yen and the possibility of intervention. What breaks if we see further intervention? And talking of the markets and the macro picture, we have been hearing from the St. Louis Fed President, Jim Bullard. He says it's important the Fed follow through on expected rate hikes. Part of our exclusive interview ahead.
November meeting has been more or less priced into markets at the 75 basis point number. Again, you know, I think you do want to wait till you actually get to the meeting, see what the situation is there. The December meeting is a little farther away. We will have more data at that point.
Teslas and the like make for good headlines. The reality is that even if every car on the roads today went electric, it wouldn't be enough to curb global emissions to avoid catastrophic climate change. Greenhouse gas emissions from transportation account for about 29% of total U.S. greenhouse gas emissions. So what about the other 71%?
Buildings across America burn fossil fuels to operate. What we want to do is make that all electric. Instead of burning oil and gas to give us the energy and electricity we need, we want to do 100% clean energy, all electric. We want to turn buildings into Teslas. Just like a Tesla or an electric vehicle is all electric with no fossil fuels, we want to do that with our buildings. And if we can do it in one building, we can do it in all buildings. And if we do it in all buildings, we'll reduce 30% of U.S. greenhouse gas emissions.
Markets are preparing to close, but the day is not over yet.
Stock that is now up about 45%.
A lot of volatility right now. You need the power of the Bloomberg terminal to get you market-moving data before anyone else.
These numbers are much higher than expected.
Upgraded today to overweight. You need top analysts to bring you exclusive global insight into cross-asset markets.
The muni bond market.
China is a really big focus.
Bitcoin ain't playing along today. It's going to be short-term.
Bloomberg Markets, The Close. Weekdays on Bloomberg.
Welcome back to Bloomberg Surveillance. I'm Matt Miller here in New York with Kaylee Lyons, Anna Edwards with us out of London, and we are looking at yields that are at cycle highs, really across the curve. I was interested to see two-year yields up to almost 260 when I logged into my terminal this morning. 5-year yields at 237, 10-year yields at 415. So this is, I think, just another example that there are reasonable alternatives to stocks. So some real competition coming from rates. Let's get over right now to Phil Serafino, Bloomberg Senior Markets Editor, to talk about this. So Phil, you know, there was an idea that maybe we hit a bottom. Bank of America said their survey screams capitulation. Nonetheless, it seems that there's other stuff to buy. You don't need to get the dip in equities just yet.
Yeah, it's been pretty hard to make the case that the worst is over. It's time to come rushing back into stocks. As that chart shows, you know, if you're getting 4% plus on treasuries, that's not too bad at a time when the outlook is not great. Everyone's been waiting for that capitulation. You know, even Bank of America says they think we might get the people throwing in the towel early 2023. So that means several more months of, you know, sort of the market grinding lower. And that's just, you know, that's just not an environment that's going to encourage people to come back into the market, especially given the economic news. And you played that clip from Bullard from the Fed basically saying 75 basis points is baked in. You know, rates could be going higher still.
Yeah, and just to labour the capitulation point a little more, Phil, because it is something that so many people are watching for and waiting for. I spoke to one guest this morning who said, no, we're not close to it. Maybe it doesn't come till sometime in 2023 because we haven't seen yields go as high as they are going to go yet. And that, I suppose, is the missing data point.
Absolutely. And, you know, there's just no urgency on the part of investors to come in. You get these little mini rallies like we saw at the start of this week, where, you know, the selling kind of peters out a little bit, people start to creep back in, but there's just no follow through, no momentum. And, you know, the economic data is probably going to continue to be very difficult for a while. You know, we haven't really seen a huge uptick in unemployment, and you almost want, you want a sense that things have gotten really bad in the economy before people start to look for that bottom.
Phil, thanks so much. Bloomberg's Phil Serafino with the latest on the markets. And for more market analysis, check out MLIV Go on your Bloomberg terminal to find the Markets Live blog. Lots on there about energy prices, the yen, and UK politics. This is Bloomberg.
Access the financial world on demand. Hear from leading economists, policymakers, and industry experts via live and on-demand webinars, only from Bloomberg. Start exploring to see what's moving the markets. Visit Bloomberg.com/webinars.
In the past 2 decades, China has built large infrastructure projects in almost every country in Africa.
African governments themselves said, we are tired of aid and charity. We want to do trade. We want to be treated like partners. The Chinese came along and said, great, we don't do aid and charity. We want to do business with you.
Global Gateway will mobilize 300 billion euros till 2027.
Now the US and Europe are answering back with their own infrastructure initiatives to counter China, but African experts are skeptical.
China has been that guy around the corner with, a bouquet of flowers to Africa, the US, Europe and the UK have time and time again said, be careful of the flowers you see out of the window. They have thorns on them.
On the David Rubenstein Show, Peer-to-Peer Conversations, I uncover the untold stories of the world's most successful leaders. Watch Wednesdays on Bloomberg Television.
A lot's happening on Wall Street.
I think Jay Powell said things that were indefensible.
Need to catch up?
This is Bloomberg Wall Street Week. I'm David Weston.
We've got the information and insights.
We think that's the next secular shift.
From businesses most influential and instrumental.
It's knocking it out of the ballpark.
It's a challenging dynamic.
This is a level of uncertainty that we haven't had to deal with.
Bloomberg Wall Street Week, live Friday with replays all weekend on Bloomberg Television and Radio.
Now, keeping you up to date with news from around the world, here's the first word. Officials in China are said to be debating whether to reduce the amount of time people entering the country must spend in quarantine. They're considering setting the period to 2 days in a hotel and then 5 days at home versus the current 7 days in a hotel and 3 at home. The country's COVID-0 policy is leaving it increasingly isolated from the rest of the world. And Ukrainians are being warned of rolling blackouts because of damage to the country's power infrastructure from Russian missile attacks, with President Volodymyr Zelensky urging people to use as little electricity as possible. Zelensky has said about 30% of Ukrainian power stations have been destroyed since October 10th. Coming up, we'll turn back to the markets as yields rise and stocks head lower. Anika Gupta, Wisdom Tree Director of Research, will join us with her take on where we go next, monetary policy and earnings. From New York and London, this is Bloomberg.
The standard way venture firms work is you commit capital, let's say over a 5-year investment period, something like that.
Yeah, exactly. Right.
And then the fund just typically lasts maybe 10 years or so.
15. Well, these days longer. So often 15. Often the tail extends out to 20 years because these companies take a long time to develop.
And somebody that invests in a venture fund today should be trying to get rates of return of 20%, would you say, or more?
You know, top-end venture is sort of 3x net of fees. You know, you ideally you're hoping for more than that. You're hoping for 5x or more. You know, you're illiquid the entire time, right? So you'd hope to get paid for the liquidity.
And today,
so yeah, maybe 20 to 40% if things go well is sort of baseline.
Let's take another subject. Let's suppose somebody says, I don't want to invest in Andreessen Horowitz. I want to be Mark Andreessen. How does somebody become a venture capitalist? What are the skill sets for good venture capitalists? There's a high degree of intelligence, hard work, a lot of luck, dress the right part, don't wear a tie. What are the things that make one a good venture capitalist?
So the highly successful VCs historically are very idiosyncratic. You have people from very different backgrounds. Mike Morris is a former newspaper reporter. John Doerr is a former chip salesman. You've got people with very different. Jim Breyer has more of this kind of blue chip investment background. You have people with very different backgrounds and experiences. And so I think it's some set of skills and some set of knowledge, and then there seems to be a taste component to it that's really hard to measure and really hard to predict.
Market that over the past few weeks has made it clear it wants to go higher. It got a little spooked by the idea that geopolitical tensions are rising.
This is Bloomberg Surveillance Early Edition. Here's what you need to know. On the brink, Liz Truss's hold on the premiership is hanging by a thread as many members of her UK Conservative Party agitate for her to go. Tesla slides, delivery and supply bottlenecks hit the EV maker's third quarter results. CEO Elon Musk tries to assure investors, promising an epic year-end. And a sweetened offer, Philip Morris says its new bid for Swedish Match is its best and final as it targets the world's largest market for smoking alternatives. I'm Anna Edwards in London with Matt Miller and Kaylee Lyons in New York. And Matt, it seems European equity markets struggling to find any momentum. Yes, we've got the political chaos, not really jumping on the latest news lines out of China, and wary of volatility in government debt markets.
Yeah, absolutely. I mean, we're seeing rising yields here, which is, I think, one of the reasons that you see lackluster demand for stock, or actually the opposite of that, right? S&P 500 futures are down 0.4%. NASDAQ futures are down 0.75%. The concern here, right, some earnings stories, Tesla having to defend demand for its products, seeing some weakness this morning, and that could drag on these two indexes. Here you see the 10-year yield right now rising even less than 1 basis point, but still at 4.14, and we showed you earlier the 2-year yield at 4.59 right now. So across the curve, we're seeing those yields continue to rise, and the question of whether or not we've hit a bottom in stocks is also being asked of yields, right? Have we hit a high in yields? Have we hit a low in terms of the price of bonds? NYMEX crude up about 1.33%. We did have a pop this morning in crude and some other commodities on that news that China may reduce the quarantine time for inbound travelers. It wasn't enough to sustain a rally in stocks, but it certainly has sustained a rally in crude as we see Brent rising as well. Kaylee, what do you see in terms of pre-market movers?
Well, there's a lot of earnings-related movers to keep an eye on. One of them being Tesla, which, as Anna mentioned, disappointed in its report after the bell yesterday. The issue really is on delivery, supply chain bottlenecks, making it difficult for Tesla actually to get cars to people. And as a result, the top line missed expectations. And yes, Elon Musk is trying to say it's not a demand problem, but still shares being weighed down in pre-market trading to the tune of about 5.6%. It's an even bigger drop, though, for Alcoa, the big aluminum maker. It's facing higher costs, but prices of aluminum are going down. All of that adding up to a surprise loss for the company in the quarter they reported. So it's down about 9%. One more positive story out there, though, is IBM. It actually topped expectations and raised its forecast, signaling strong demand. It's being able to withstand a stronger dollar and those FX headwinds as well. So IBM up about 3% before the bell, Anna.
Yeah, quite a lot of divergence, it seems, across the reporting, the corporate reporting schedule so far, Kaylee, in this reporting season. The European markets are taking all of that on board and showing some moves lower. The Stock 600 in Europe down by 0.6%. And not many sectors, no sectors going in positive territory, apart from energy. That seems to be one area where we are managing to eke out some positive ground. The UK two-year yield, 3.49%. Actually a bit of a turnaround here. We had seen that, we're now seeing buying of UK debt. We had seen some selling, we had seen those yields going higher. Now we see them coming a little bit lower, but the point remains that we're seeing the UK market move kind of in step with the rest of the European markets today, and that is something really, given the political turmoil that we've seen in recent weeks, and it continued overnight. Ericsson down by 16%, just shy of. This is a telecom equipment company, of course, and they missed in terms of their profit that they reported to the markets. They're under pressure from an activist investor, and they are also being cautious about what happens from here, saying it would be prudent to assume that some of their customers reduce their spending on, for example, 5G. Hermès is the luxury goods company out of Paris, and of course we've seen a number of luxury goods companies having quite a good quarter, reporting better than expected in China, but also saying that American tourists in Europe are spending those strong dollars, Matt, and that is adding up to some better results for the sector.
All right, we'll continue to watch, obviously, all those luxury goods companies. It really is a threat, I think, in today's markets. Let's get to Anika Gupta right now, WisdomTree Director of Research, and take a bigger view first, the 35,000-foot view, Anika. The question of whether we hit a bottom in markets has been asked. Bank of America came out with a survey yesterday saying that the results scream capitulation. Nonetheless, it looks like we're going to be down again today as rates continue to rise. What's your view?
I couldn't agree more with them. A very good morning, Matt. And you know, we kind of share the same view because we have seen equity market volatility remain high as monetary policy is increased, you know, at an excessively sharp rate across central banks in developed markets. And now, as we enter the Q3 earnings season, the key focus is really going to be on current macroeconomic challenges that are being priced into stocks, and that's going to be alongside forward guidance. So investors are going to be looking very, very closely into what that forward guidance really is. And you know, the reality is the brief rally that we've seen so far has been owing to some, you know, pretty good earnings coming in. But inflation and the strong dollar, I believe, are obscuring the real earnings picture. So I think higher discount rates will continue to deflate earnings multiples, and it's still too early to say if we've hit the bottom.
Okay, and those higher discount rates, of course, links into a conversation about how high yields go then, Anika. And I wonder if you could weigh in on that in the UK, from a UK perspective. We've just heard from Broadbent of the Bank of England saying that UK rates may not rise as much as markets see, which does sound a little more dovish than some of the commentary of late. That's from Ben Broadbent, Deputy Governor at the BOE. How aligned do you think are market expectations of hikes and the bank's intentions?
Very good morning, Anna. Yes, there is a slight disconnect, and that's because over the past few weeks, we've been through a stream and a raft of changes coming in from the government and the Bank of England. So we started off with this launch of the original mini budget. We've then taken a complete reverse course on the mini budget and a reverse on fiscal policy. And now the key focus really is on quantitative tightening being delayed until next year. Now, given the fact that we've taken such a sharp turn on fiscal policy, there's a very strong likelihood of that really impacting the market on the downside as well. So while originally our expectations for the Bank of England was to come in with an aggressive 100 basis point rate hike, we now think there is a possibility of them lowering that to around 75 basis points. Because if you think about it, this reverse take on fiscal policy is also likely to impact demand going forward. We're seeing very high inventory levels. We're seeing a drag on consumer demand. And the key focus for the Bank of England is they need to loosen this ever so tight labor market, that has been tightening even more since Brexit. So to get from a 10% down to a 6% was relatively easy. But now to loosen that from 6% all the way down to 4% is going to be a lot more harder.
Anika, on the subject of fiscal policy, how are you thinking about that in the U.S. and the implications of the midterm elections for that as a potential market risk event that's now less than 3 weeks away?
Morning, Kaylee. Yes, that's a very interesting question. And what happened in the bank in UK and, with the Bank of England having to step in, it is a big stark reminder for the rest of the world to not make the same mistake that the UK has made. So I think for now, the US will tread very carefully on its take for fiscal policy. We do have fiscal deficits at a very high level, and I think given the fact that now we're entering the midterm election period, focus is going to remain on managing that fine balance between not having very loose fiscal policy alongside the fact that you've got the Federal Reserve on an extremely sharp, tighter monetary policy path.
Okay, Anika, thank you so much for joining us. Where will the next geography for volatility be? Anika Gupta joining us there from Wisdom Tree with the latest on the markets. And coming up, St. Louis Fed President Jim Bullard expects a shift in Fed policy early next year. Part of our exclusive interview next. This is Bloomberg.
Is it possible the industry is in an arms race that will lead to spending itself into an oversupply? I mean, that has happened before.
We've looked at this very carefully, and the digitization of everything. Tell me what aspect of your life, Emily, isn't becoming more digital?
Well, I'm trying to prevent that, but yes, I think it's happening.
And COVID has accelerated that. The industry cost $500 billion last year, the semiconductor industry overall, and estimates are $1 trillion, a doubling by the end of the decade at that point. I believe those estimates. It's not that there's not going to be some blips and turns on the way, and the majority of that is driven by leadership process technology, of which only 3 companies can satisfy that need.
No one covers the world like Bloomberg.
Because Trustonomics is being dismantled, MPs behind the scenes are asking, what's the point of having her at the top?
Can the strong dollar amplify the world's risks of instability?
Xi Jinping said complete reunification must be realized.
With unmatched reach and resources from more than 120 countries, the moment news breaks, 24 hours a day. Bloomberg, your global business authority.
This is Bloomberg Surveillance Early Edition. I'm Caitlin Lyons with Matt Miller in New York and Anna Edwards in London. Well, St. Louis Fed President Jim Bullard says he expects the central bank to end its front-loading of aggressive interest rate hikes by early next year. He spoke exclusively with Bloomberg's Kathleen Hayes.
I do think they will have an impact and in some ways have had an impact. I would cite the housing market in particular, where it appears that increase in rates has really changed the dynamics there. So that's someplace that I would say there are not long and variable lags. That market anticipated Fed moves that before they were even in train this spring. And so that's a place where we've seen impact right away. But, it's a big ship, and it takes a while to steer the ship. And so the housing market is not the whole economy. So
It certainly isn't, and it's certainly not one of the main things driving inflation now. Of course, prices have fallen, but
rents are important, though.
Well, they certainly are.
Yeah.
They certainly are, and in fact, that's one reason why people are so worried about inflation staying high next year, is that those rents are, the way they are calculated, they're going to spread out over several months.
Yeah, but we're aware of the lags in the calculation, and so we'll take that on board and take a look at that. But yeah, you're right. The core measure of PC inflation is still in the high fours, and the Dallas Fed trim mean 4.75 or so. So pretty high inflation in the U.S., even if you try to trim out some of the more volatile components. So we're going to have to get that turned around, moving in the right direction, back toward 2%.
So how are you going to do that? What does this mean for the restrictive terminal rate of the September steps medium target interest rate? 4.4% this year, 4.6% next year. What are your, after the latest data, what are your projections now?
Well, if you look at the September summary of economic projections, the so-called dot plot, it did seem that the committee was coalescing around further rate increases at upcoming meetings, even by the end of the year. So that seems to be the base case right now. Most of that has been priced in the market, so I would anticipate that that's having an impact right now. So that's good news if you're trying to get inflation down. But we'll have to follow through on that in the subsequent meetings this year and get the policy rate up to a level where we can put meaningful downward pressure on inflation. I think that's the main goal immediately ahead of us at the committee.
So, you know, off the cuff right now, what do you say that level looks like it's going to be? Is it going to be higher, for example, than you thought it might be? Is that the risk here? Not that you're going to be okay or you're going to move it lower, but they're actually going to need to have more rates to get to a more restrictive level.
Yeah, I've done this calculation about sort of a minimal level that you would have to get to put downward pressure on inflation. I did it at a conference in Stanford in May, and you can look it up on my webpage. But at that time, the number came out to 3.5%. But since then, the inflation news, unfortunately, has continued to surprise to the upside. So if you do that again now, you know, you're going to get something closer to what's in the dot plot, 4.5, 4.75, something like that. And I think also, you know, we're data dependent and we're watching the data. I think we're predicting, or at least the dot plot is predicting, that inflation will come down. It will be a disinflationary year in 2023.
St. Louis Fed President Jim Bullard in an exclusive interview there. Joining us now to further discuss is Bloomberg Markets editor Valerie Teitel. Valerie, did we get anything new from him there?
He's reiterating what we've heard from other Fed officials, that core inflation is the real enemy here. But I want to pick apart one thing he said, and it was at the end of his speech. He said market-based inflation expectations are looking good. I want to pick that apart. Break-evens since October, this entire month, have shifted higher across the curve. And then if we look at survey-based inflation metrics, the UMich data, for example, those ticked higher as well. And we know that the UMich survey explicitly follows gas prices. And we've seen things like the China reopening news, right? That has boosted oil prices this morning nearly 2% after closing 3% higher yesterday. I think there's a real risk that inflation expectations tick higher from here, and that will cause a ratcheting higher of the terminal rate.
All right, and well, U.S. yields hitting highs, cycle highs right now, as you showed an excellent chart earlier, Valerie. The BOJ, again, stepping in to defend their yield target. It's the same all over again, but what do we actually worry about, or why and when do we actually worry about a BOJ shift?
Look, we all know that this BOJ policy could break soon. We just don't know when. But I would put it in the bucket of things that could ruin your Thanksgiving, Matt. The market is very, very worried, and I want to show you something here on this chart. I've mapped out here the 10-year yen swap rate versus the bond yield. And we can see here with this red line, that's the 25 basis point yield curve control that the BOJ defends. The swap rate is trading at 61 basis points. That means those hedgers in the market were getting so worried that a yield curve control break situation might come, they're willing to pay nearly 35 basis points above the BOJ's target to put it on. And look, yes, dollar yen is showing some fireworks, but the real fireworks comes from when the Bank of Japan shifts on their yield curve control, and then the last true buyer of fixed income steps back, and the world is really flooded with higher term premium and yield surge everywhere.
Okay, and I know that this could have read across outside Japan, of course, Valerie. We heard from Jim O'Neill, formerly of Goldman Sachs, of course, who said pretty recently, if this is poorly handled, it could have a much bigger global consequence than the recent UK mess. So we will watch very carefully. Thank you very much to Bloomberg's Valerie Teitel for the update there on both the Fed and also the BOJ. And if you want to see Valerie's charts up close, then you can go to GTV Go. That is the function to use on the Bloomberg terminal. Coming up on this program, European leaders are gathering for a two-day summit on energy. How bleak or otherwise does the picture look for this winter? We're live from Brussels next. This is Bloomberg.
Steve's ability on the course may not be etched into any record books, but following him around, it's clear that it's not for lack of trying.
Jeez.
We were constantly hustling behind him as he caught up with executives in the portfolio companies and reminisced with former and current players.
He's a day trader. He caught himself, self-made day trader.
Yes.
And so he's on the bus after a game in New England, and he's day trading on the bus, and Bill Belichick sees him and cuts him on the spot.
You know, in many ways, it's a convention, right, of the people that I don't see maybe once a year. And so it's kind of all come together. My firm, our charity, our fundraising efforts, and then the friends that are around. My dad and my brother, it all happens right there as a confluence of all these parts of my life that have found its common center.
The difference between endless research and a winning strategy. To improve your firm's productivity and profitability, Bloomberg Law combines the latest in AI-powered tools and in-depth analysis to accelerate the research process. To grow your practice and make better use of your valuable time. The difference is Bloomberg Law.
Our biggest cost base is purchasing parts and our staff. The overall energy cost is not negligible, but it will not endanger our business in the current situation.
Our founding father, Charles Rolls, said in 1900 that he foresees a great future for electric cars once charging is fixed and is available. And I think now we are here fulfilling his prophecy.
We are fighting for the #1 spot in terms of pure EV sales in Europe.
It's the very first time that you can acquire in the super luxury segment an electric car.
The cost of EVs is concerned. As we scale this technology, eventually cost will start to come down.
From my perspective, I think electric is only a transition, but hydrogen can really be the solution.
We need to protect the affordability for the middle classes to access clean, safe automobiles. This is fundamental. And of course, the energy inflation is not helping.
Europe in particular will be challenged in the next 2, maybe 3 years. And we're working on fixing that, especially Germany that's been dependent on gas coming from Russia.
The governments, they have understood that they cannot bet on only one solution. And especially now where we see, for instance, with the energy crisis, for instance, in Europe, we would like to have hydrogen.
If we go and look a little bit longer, mid to long term, I think this may even be a catalyst to go quicker into renewables.
Some European auto executives, their global auto executives, speaking this week on Bloomberg Television about their ambitions and plans to compete with the likes of Tesla and how they intend to deal with the energy crisis that we see on the continent and in the UK. Let's get a look at what's ahead today. The Turkish central bank will likely deliver another cut, further cementing its outlier status among global central banks. And then U.S. data coming out today includes U.S. existing home sales, initial jobless claims, Conference Board leading index. So you'll get those signals on the economy to the markets and to the Fed. Blackstone, Philip Morris, and Snap will be among the companies posting results today. And interesting after Philip Morris brings its bid to Swedish Match up to almost $16 billion. And finally, European Union leaders gather in Brussels for a summit that is dominated by energy and the war in Ukraine. The meeting comes after the head of the Commission, Ursula von der Leyen, unveiled a sweeping plan to bring down energy prices across the continent. Anna?
Now let's get to our European correspondent, Maria Tadeo, who is covering that summit, Matt, that you were just mentioning. Maria, there is a plan for action around energy, and energy and war are the very linked topics of conversation at this summit. Is there any political consensus around the plan, though?
Well, Anna, today, finally, we get to find out whether or not there's consensus. It is decision time. Remember, the criticism just a few weeks ago is that there were so many ideas floating in the European space that it was very difficult to get to an actual informed debate that could produce results because there just were too many options out there. We know now that the Commission has put out a point plan. They talk about the, very dynamic price cap. It's unclear exactly how that would work in the real market. They also talk about a circuit breaker that could potentially put an end to price spikes in the market, the joint purchases of gas, all of this coming together for leaders to debate. The reality is, however, in this meeting, which I'm being told so far we're very far from consensus. That is from a source that I talked to who says this is still a conversation between a growing number of countries that want to see a price cap and Germany. Germany continues to say they do not support this idea because they worry the implications of it, the signal that it would send to the market could compromise supply for the Germans right now. This is a story about securing supply, even if it is expensive. This is going to get tense today. I am being told, as I said, there is no consensus on this, but you know very well in Brussels, the night is young and 24 hours, well, a lot of things can change in the city.
Maria, just quickly, as we talk about contention on some of these issues, are they at least still unified in their support for Ukraine, or are we starting to see some wavering in that support?
Look, I think we'll have to keep a close eye on Viktor Orban, the Hungarian prime minister, always very outspoken, the problem child for some in the European Union, but also Italy. Overnight, there was a private conversation from Silvio Berlusconi, which has created a national scandal in the country. He flat out blames Ukraine essentially for pushing Vladimir Putin into this invasion. He says some of the content has been taken out of context, but this is now a very contentious debate in Italy. The problem, of course, is Mario Draghi is on his way out. This meeting could be his last. And then this is a government that is still in the making.
Okay, Maria, thanks very much. The Italian perspective there on what's going on in Ukraine. Maria Tadeo in Brussels. She'll keep us up to date with all of the conclusions on energy and the war in Ukraine. That is it for Early Edition. We will keep the coverage coming, though. This is Bloomberg.
what do you say to the cynics that say, look, it's all nice and fine, but a lot of it is greenwashing, and you're not a good company, you're just a less toxic company than some of the other oil majors?
Well, the first thing to say is that, you know, I'm a big believer in we need to put ourselves in other person's shoes in life in general. And so I understand that point of view, and I get that people have that perspective. I don't agree with that, obviously, but I understand where they're coming from. We have an enormous challenge as society, which is to provide the world with reliable, affordable, and clean energy. That's what society wants. That's what society needs. And I believe in my heart that a company like BP is actually one of the few companies in the world who can actually make that happen. We can talk about the things that we're going to grow and over the coming years, and I find it hugely exciting and energizing for our organization. But that's what the world needs, and you simply can't go against the grain of society. You can't defy gravity, and that's why we're making the change that we're making.
Markets countdown in Europe. From the financial centers of the world, Bloomberg Markets European Close with Guy Johnson in London and Alex Steele in New York. Real-time numbers, real-time analysis. Weekdays.
This is a market that over the past few weeks has made it clear it wants to go higher. It got a little spooked by the idea that geopolitical tensions are rising.
I think the Fed's going to be able to get inflationary pressures to subside, but at what cost?
They're not at levels where one can say we can declare victory now.
Over the next 3 to 6 months, we still have a lot of monetary policy tightening ahead of us.
It may be some time before we get back to low rates.
I don't see 2% rates coming back anytime soon.
This is Bloomberg Surveillance with Tom Keene, Jonathan Farrow, and Lisa Abramowitz.
Good morning, everyone. Jonathan Farrow, Lisa Abramowitz, and Tom Keene. Mr. Farrow off on that paper, the FTSE and the Dow, really acclaimed. It's behind JSTOR, folks. Some of you asked for it. It's behind a passcode on JSTOR. Anyways, Farrow is off, and we are here. And, you know, Lisa and I, we put our heads together, and guess what? We're considering it Pivot Thursday. There is so much going on this morning. We will go to London here. Lizzie Burden briefed here on the huge movable feast of the collapse of the British government. We're not there yet, but, you know, there's reports coming in. I saw something from Sky moments ago. But, Lisa, we have got to go over to the bond market, which 2 days in a row pivots to higher yields.
This is front-loading Thursday, right? This is basically this question of Jim Bullard coming out yesterday with Kathleen Hayes saying that they really need to front-load. This has been the theme that we've heard, although some say that they're going to also continue after that. Nonetheless, that 2-year yield has really been parabolic. We are almost to 4.6%. We are pricing in 5% Fed funds rates next year. This is a game changer for how far the Fed can go and how much this market can withstand.
Farrow doesn't like to do math in the 6 o'clock hour. Lisa and I are going to do math now. Stay with us on radio, please. From a huge negative 10-year real yield up to where we were today, a new high in the 10-year real yield, 1.69%. We've made it 88% of the way back to where I was before the great financial crisis. We're getting back to what I knew was normal.
And this is key. It's the real yield. It is not just nominal yield. It is being driven by this feeling that the Fed is going to have a higher base rate than it's had and higher relative to inflation at a time when, again, people gaming out. What did we hear yesterday from one bank, from BNP? 5.25% Fed funds rate. I mean, these are the kinds of projections you're hearing out on Wall Street right now.
One other idea here in Pivot Thursday, maybe Kuroda will pivot, maybe the Bank of Japan, and critically the Ministry of Finance will pivot. I woke up to a 150 yen. That's historic, back a zillion years to 1990.
And people are calling about intervention. You also saw the 10-year Japanese bond trade above the range. By the way, we're opening ourselves up to all sorts of criticism with Pivot. People are going to send us GIFs of, like, you know, people dancing and pivoting, and the Fed's going to pivot. I mean, it's almost been like, you know, it's been dragged under the mud or raked under the coals, whatever kind of acronym that you want, based on the idea that the Fed is not going to retrace, and that's sort of what it's been associated with. And I think that the market's pivoting away from that.
Lisa, for the American audience here,
on the chaos in London. All I can say is I woke up to it's more immediate for Prime Minister Truss than it was 24 hours ago.
Yeah, her Tory peers are basically saying, get out. I mean, really, they're
Right.
really saying, we hope she doesn't last through the night. That was one of the MPs. That was what they said. We hope that she doesn't last through the night.
For those of you framing caution, Max Kettner's going to join us quickly here. We're going to get through the brief. Let me do the data real quickly here. Red on the screen, ever so slight. Futures -12. The VIX really goes nowhere for 6 weeks. 31 level on the VIX, and the yield structure is simple. 4.58% was 4.60%, 2-year yield, 10-year yield 4.14%. Oil not part of the story today. And dollar really interesting with real Pacific Rim weakness. And I do want to note Chinese stocks really not doing all that well. I don't know about you, but let's pivot to a brief.
Let's pivot to 8:30 a.m. That's the U.S. initial jobless claims. Really curious to see whether they start to tick up. I mean, if you look at the actual line of initial jobless claims since the pandemic, it looks like it's flatlining. It looks like someone died. This is the question. When does it come back up and start to really give a sense that there is this loosening in a labor market that really has been quite tight? Today, the talk show that is Fed Speak includes Philadelphia Fed President Patrick Harker, Fed Governor Philip Jefferson, Fed Governor Lisa Cook, and Fed Governor Michelle Bowman. I know you love this, Tom. Jim Bullard, though, yesterday set a tone that we're going to hear more of. That it is important to front load, but it is also important to wait because of the lag effect.
I'm going to listen to Harker. I think he's got a great concept there with his business background of the manufacturing of the Philadelphia region. And with earnings coming out today off of Procter & Gamble yesterday, it's a rich day. I'd also note, I believe, American Airlines out.
Yeah, so let's talk about some of the earnings. We do get American Airlines. We also get Blackstone, Freeport McMoran. I'm curious about that wholesale space. Snap and Whirlpool. Just the industrial companies I'm very curious about.
Yeah, the tool business for Snap, it's going to be amazing to see what they do in branches.
Snap-on? What do you think it is?
Is it Snap or Snap-on that we're going to see?
It's Snap.
Like
it's
techie,
a social media thing.
media.
It isn't necessarily a tool belt. I'm just curious. Just
providing clarity, Bramo.
Incredible insight.
Bramo's favorite guest joins us right now. He's hugely popular with the Bloomberg surveillance audience worldwide. HSBC's chief multi-asset strategist, Max Kettner. Max, when does the gloom lift?
Yeah, good morning, Tom. I think it's going to take some time still. I just cannot see risk assets. I cannot see equities really forming a bottom before we see the correlation between risk assets and rates turn negative. Why is that? Well, very simple, because that would tell us that the market is switching into proper recession concerns. All that we've talked about, I've listened to you guys just now, all that we're talking about still is inflation. So all what we're still talking about is, well, is there going to be further upside surprises in inflation in the UK, in Canada? You know, we've seen the UK broadly in line yesterday. All that is still enough to inflict broad-based pain across the asset classes. And that is our positioning still, unfortunately.
Julian Emanuel over at Evercore does a daily note now, folks, in earnings season. He talks about forming the dry kindling of what could be a bull market. Max, you know the market gets out front of the econo-babble. Is the market doing that right now?
No, it's not really doing it, unfortunately, because I think what we have is we have an almost abnormal obsession with all things inflation, right? Whether that is, you know, the claims data today, whether that is, you know, tier 2 data like inflation expectations from the University of Michigan survey, for example. The problem that we're facing now, if you want to jump on any kind of relief trade, any kind of Goldilocks trade, the big issue that you've got doing that is that none of those data can get in your way. So none of the CPIs or PCs or PPIs or NFPs or claims or indeed any of the global inflation data can get in your way. So the risk reward on jumping on such sort of a relief rally or year-end relief rally is extremely poor. It's an extremely poor risk reward where the data just can simply get in your way and really smack your trade.
This seems like almost a consensus, the bearishness around Wall Street, at least the expectation for some sort of downturn, where there's a much bigger controversy is around the long end of the Treasury curve, 10-year Treasuries, with some people saying they're headed higher because we are going to lead to a more inflationary environment. And then HSBC, which is saying actually probably not. Are you actually incredibly bullish right now on the longer end of U.S. yield curves?
I'm not quite yet, right? I don't think we're quite at the point yet. So we need to see a couple of things happening. So for example, one of them is if we see certain parts of the yield curve move further towards inversion. We know that 2s10s is inverted, but we also know that the 2s10s part of the curve is usually the one that's pretty much the worst of the common yield curves in signaling and its signaling effect in terms of a recession. It is much better if you look at 3-month 10s, or if you look indeed at what Powell was saying a couple of quarters ago, the front end forward spread. Those are still not flat. Those are still actually in positive territory. So we need to see them actually first, at least flat, until we can really go and play that sort of end of cycle recession trade. And then on the other hand, the reality is that hard activity data are still pretty strong, right? So we all feel miserable. Everything that we're talking about is pretty much flat out doom and gloom and misery. And that is, consumer confidence. That's based on PMIs and all the surveys and the soft data. But the hard data are still actually holding up pretty well. And that keeps yields still a bit on the upside. So that, again, we need to see that change a bit, that the hard data surprises start to converge towards the soft data surprises. Then it's time to switch into sovereigns.
So Max, given that you have to recommend an allocation, is it just 100% cash?
No, absolutely not. I think in actual fact, we've just moved into maximum overweight commodities this morning because we are quite concerned about not only the demand side of things, right? So possible, for example, gas to oil switching, particularly in Europe. So not only on the demand side of things, but particularly also on the supply side of things. Really, a few really underappreciated supply concerns that keep us quite bullish, actually, now for the next couple of months on energy at the moment. We do like value over growth in equities. We do like things like insurance, things like food and beverage.
Yeah,
so really the defensives,
Max,
not only just cash.
We got to go, Max, but give me a Brent crude price. I mean, fold your commodity optimism into what Brent crude does. Do we go back over 100?
I think we're going to go back over 100. We've got a 100 sort of average for Q4. So that probably means, it's going to take a bit of time back to the range where we've been up until 2 months ago.
Max Kettner, thank you so much with HSBC. And within the pivots of today, we're going to go to Britain here in a moment on all that's going on with Lizzie Burden, I believe, scheduled to be with us if we can link up with her at, I believe, 10 Downing Street. Just a research report is really fluid right now in the earnings season, about 20% coming in. Lisa, Oliver Chen channeling what we talked about yesterday. What was the stock that went down 45% yesterday?
Oh, yeah. Olaplex.
Olaplexer at Weather. He comes out with a deep 35-page research note on Sephora. And everybody watching who has young girls knows what Sephora is. And Chen is robust on Sephora and robust on Ulta, and ought to be based on what I see coming in.
Well, and there was a story in Business Week that I was reading this morning about how the wealthy consumers keep spending at really accelerated
Dana Telsey mentioning that.
And this is really the divergence between the deciles, as you talk about, where the upper decile keeps spending, and actually a lot of these companies like LVMH can increase prices at a much more rapid level.
Quarter for LVMH,
exactly.
way above on market.
But so then how does that factor into overall inflation when you have a significant portion of the population flat on its back?
I agree, and you maybe have two markets here where you've got the caution of Max Kettner, but you've also got some optimism, as Julian Emmanuel speaks of. Futures at -14. Coming up from London, Lizzie Burden joins us. This is Bloomberg.
Keeping you up to date with news from around the world with the first word, I'm Lisa Mateo. Liz Truss's premiership is looking increasingly fragile after a day of drama at Westminster. The British leader fired one minister over a security breach, and 2 others were heard resigning amid the fallout from a chaotic Commons vote before agreeing to stay in their posts. Many Conservative lawmakers now want Truss to resign immediately. Ukrainians are being warned about rolling blackouts because of damage to the country's power infrastructure from Russian missile attacks, with President Volodymyr Zelensky urging people to use as little electricity as possible. Zelensky has said about 30% of Ukrainian power stations have been destroyed since October 10th.
And Italy's Silvio Berlusconi has told lawmakers that President Zelensky forced Russian President Vladimir Putin into an endless war. That's according to an audio obtained by an Italian news wire. That recording reveals the existing pressure on the right-wing coalition that won elections last month to soften Italy's stance toward Russia. And Netflix top executives continue to battle it out over releasing more of its original movies in theaters. The Wall Street Journal reports some argue Netflix is leaving hundreds of millions in box office receipts on the table by showing select movies in a few theaters for a few weeks, while others feel theater showings create buzz for the streaming service. Global news 24 hours a day on air and on Bloomberg Quick Take, powered by more than 2,700 journalists and analysts in more than 120 countries. I'm Lisa Mateo. This is Bloomberg.
Apple's delaying its next major iPad software update, iPadOS 16, by about a month from September to October. Apple made the decision for a number of reasons, including a still buggy Stage Manager multitasking interface and in order to link the launch closer to the more similar macOS Ventura. Still, it's an unusual move. Since shifting the launches to the fall in 2011, Apple has released its new iPhone and iPad software updates simultaneously each year around September. By staggering the releases, users may find some issues around compatibility with cross-device features like retracting and editing messages in iMessage, the new shared iCloud photo library, and the new feature for transferring FaceTime calls between iPhones and iPads. It will also make it a bit harder for developers to launch apps that run on both the iPad and iPhone that require new APIs and features found across iPadOS 16 and iOS 16. Regardless, it was still, of course, the right move. Stage Manager on iPadOS 16 is still quite buggy. I don't find it particularly intuitive, and it's not compatible with most iPads and many third-party apps on the App Store. The feature clearly needs some more polish. And complaints from consumers about Stage Manager will now no longer probably overshadow the earlier launch of the iPhone 14.
Lisa, you've got to explain this one to me. What does it mean when the White House says we're watching markets carefully?
It means they have a Bloomberg.
I've seen the Bloomberg.
They have.
I've been in and seen it.
Lots of Bloombergs. Lots of Bloomberg. Lots of Bloomberg. Lots of Bloomberg. Lots of Bloomberg. Lots of Bloomberg.
I've seen the Bloomberg. I've seen the Bloomberg. I've seen the Bloomberg. I've seen the Bloomberg. What does it mean? What does it mean? What does it mean? What does it mean? What does it mean?
It means they have a Bloomberg.
Today's CFOs are reshaping the C-suite, positioning companies to meet the next generation of challenges, breaking out of traditional roles.
One of the most important things is looking around the corner.
Look for Chief Future Officer on Bloomberg. The markets are preparing to close, but the day is not over yet.
Stock that is now up about 45%.
A lot of volatility right now.
You need the power of the Bloomberg terminal to get you market-moving data before anyone else.
These numbers are much higher than expected.
Upgraded today to overweight.
You need top analysts to bring you exclusive global insight into cross-asset markets.
The muni bond market.
China is a really big focus.
Bitcoin ain't playing along today.
It's going to be short term.
Bloomberg Markets, The Close, weekdays on Bloomberg.
On the David Rubenstein Show,
peer-to-peer conversations, I uncover the untold stories of the world's most successful leaders. Watch Wednesdays on Bloomberg Television.
Surveillance, Lisa Bramison, Tom Keene, John Farrell on assignment this morning. Futures at -13, the VIX 31. Yields higher, yen prints 150, weak yen, but all eyes in international relations and in politics turned towards London. David Blanchflower will join us in a moment with his work for the Bank of England and now at Dartmouth. But first, in front of 10 Downing Street, I guess as history is made, our Lizzie Burden. Lizzie, there is so much speculation, and of course the British press is a beast unto its own. Let me go to the discussion of this committee that makes the rules for this beleaguered Conservative Party. Tell us what the 1922 committee is thinking on a Thursday.
Well, the wind seems to have changed in Westminster, Tom, because yesterday it seemed as if the Tory party was going to give Liz Truss a chance to cling on until at least the Halloween budget. But since all of the chaos yesterday over the fracking vote, the resignation of Suella Braverman, the Home Secretary, now there's massive pressure for Truss to resign. So the discussions behind the scenes are who's going to replace Truss, and it seems to be, they're talking about Rishi Sunak, they're talking about Penny Mordaunt, some are calling for Boris Johnson, saying that he's got the biggest mandate of anyone, because he actually faced a general election. I don't know if you can hear the protesters. I don't want to inflate their influence. It's the same guy we heard the other day, but he's calling for Tories out. But that's the fear. You know, if they replace Liz Truss, the fear is there'd be a general election.
Lizzie, 20 seconds here in between protests from the gentleman intruding. What's the likelihood that the Prime Minister will resign today? For the American audience waking up, I mean, is this immediate or is this something where she gets to the weekend?
I can only tell you that the international press is gathering here, discussing, making sure that they're on shift to cover it if the lectern comes out. MPs behind the scenes say there are hours to go. The photographers keep shouting, Range Rover, because you've got ministers coming and going. You see the chief whip, you've seen the chairman of the Conservative Party. It seems that the discussions are ongoing for who's going to succeed Liz Truss. So it could be hours.
Saving petrol in their Range Rovers. Thank you so much, Lizzie Burden, in front of 10 Downing Street. We'll continue to follow this story with Bloomberg News' government team in London. Right now, the perfect guest for this moment, for his beleaguered London. Nothing like this ever happened in his Wales. From Cardiff, David Blanchflower joins us. He is Dartmouth Professor of Economics and far more a former Bank of England Monetary Policy Committee member. David, I guess I want to avoid the politics. And just within the chaos of London, what the Commonwealth outcome is for the people of the United Kingdom. Whether Labour, whether Tory, new Tory government, will England be poorer in 12 months?
Well, I think so. I think it's clear that there's a risk premium that's happened since that terrible mini budget that's come. The financial chaos, actually, I think, Tom, is what's driven the politics. So what you saw is a budget that was not, they didn't work out what the funding was. They fired the permanent secretary at the Treasury. They said more tax cuts are coming, and the markets didn't like it. So we saw the pension funds collapsing. We saw mortgage markets not being able to price products. So that kind of chaos has caused the politics, and I think, excuse me, I think it's caused the economics and it's caused people to be poorer. I mean, Ben Broadbent, the governor of the bank, one of the deputy governors, came out today saying, you know, this is not looking good on the downside, and maybe the bank won't be able to raise rates as much as the markets are thinking. But this is sort of apoplectic. I mean, I've never seen anything happen so quickly. Well, and remember, I think it was The Economist said they didn't think that Truss had the shelf life of a lettuce. And it turns out that the lettuce is probably going to win. But the British people actually, in fact, are going to lose.
Well, it depends what kind of lettuce, I suppose, Danny. I am
Yeah,
curious.
No, well, they posted it. You
Yeah.
can see it online.
Exactly. They have a believe a live
It's a
cam
60
of said lettuce.
one from Tesco's.
What's your question? What's your sense, though? You had said initially when this all transpired that you thought that the Bank of England should raise rates by 100 basis points in an emergency meeting in order to get some credibility in markets. They didn't, and they won in terms of markets moving toward them. What do they have to do next month when they come back together and try to understand how to approach an economy that's going to weaken one way or another and plans that look much more like austerity than anything else on a fiscal level?
Right. I mean, in a sense, Lisa, it's asking me what's going to happen in the next 24 hours. We don't exactly know. I mean, obviously, the problem is that there are arguments on the one hand to say you need to stabilize the currency, you need to worry about inflation. But actually, the data from yesterday suggests that the UK's hit peak inflation. And then the evidence is actually that the economy is going to slow. I mean, especially, well, we don't know what's coming. We heard that lots of spending cuts were coming, but that was yesterday. So I think the bank's going to be in a position where there's very strong arguments on one hand to raise rates and on the other hand to cut them. I mean, what they've got to do is calm nerves. That's really what they've got to do, Lisa.
Professor Blanchflower, what changes if Labor takes over? What, within the mess of this, what happens if it's Prime Minister Starmer?
Well, I mean, I think you're going to see things at the edges, but I think essentially what if I was advising him, I would say what you're going to have to do is you can't really do anything much to start with. And Rachel Reeves, the Shadow Chancellor, has said this, you've got to get in, try and calm nerves, work out what the right strategy is. They'll probably, I think the thing they would probably do on the first day would be to impose a windfall tax on the oil companies. And the CEO of Shell has even said that's probably a sensible thing to do. They may well go and impose a windfall tax on the banks. But I don't think they're going to move very fast because, the chaos that's going on is really, I've never seen anything quite like it. So the political chaos now is feeding back to the economic chaos, and they're going to have to calm nerves and say, we're not going to do anything stupid. We're going to pull back that mini budget. We're going to talk to our permanent secretary. We're going to talk to the OBR, and we're going to think where we go. But I think they've made that clear that they're going to have to sit and take stock because you want to be in a situation where you're trying to catch a falling knife. And if you ask me these questions in an hour, the answer might be different because
we'll do that. Come back in an hour. David Blanchflower, thank you so much with Dartmouth College. Greatly appreciated. A movable feast. I just looked at a technical study, Lisa Abramowitz, of sterling, and when the moving averages converge to a point like this, whatever your setup is, that's where we are right now. We're at a point here at 111.97, and you just wonder, and do the markets again tell the politicians, whether Tory or Labor, what to do with you pick your level on sterling where it goes weaker, drives weaker.
It gets more complicated from here because on one hand, you do have yields coming down on the long end, which is positive, at least for the Bank of England, but you do see a weakening, a pervasive weakening, and perhaps not to the recent lows, but still, nonetheless, the pound has lost a lot of its international clout. When you do have everyone calling for austerity, you do have this expected lower growth picture no matter what happens. And so what is the market calling for, right? What's the break point going to be? What are they going to really lobby the Tories or anyone else to do?
But it is a political battle, and folks, I wish Farrell, where's Farrell? What's he doing?
You keep telling him, you keep mocking his dislike, his disdain of the Dow. Playing footsie.
I don't know, he's in Glasgow or Edinburgh giving a paper.
He's on a well-deserved day off. Have a great time.
Futures at -10. Sterling.
Keep telling him things.
111.98. Good morning.
While Teslas and the like make for good headlines, the reality is that even if every car on the roads today went electric, it wouldn't be enough to curb global emissions to avoid catastrophic climate change. Greenhouse gas emissions from transportation account for about 29% of total U.S. greenhouse gas emissions. So what about the other 71%?
Buildings across America burn fossil fuels to operate. What we want to do is make that all electric. Instead of burning oil and gas to give us the energy and electricity we need, we want to do 100% clean energy, all electric. We want to turn buildings into Teslas. Just like a Tesla or an electric vehicle is all electric with no fossil fuels, we want to do that with our buildings. And if we can do it in one building, we can do it in all buildings. And if we do it in all buildings, we'll reduce 30% of U.S. greenhouse gas emissions.
Access the financial world on demand. Hear from leading economists, policymakers, and industry experts via live and on-demand webinars, only from Bloomberg. Start exploring to see what's moving the markets. Visit Bloomberg.com/webinars.
Good morning, everyone. Bloomberg Surveillance for following a number of really key stories in economics, finance, investment, and yes, in politics as well. And no, it's not Washington in the midterm elections. It is a chaos in London. We'll continue with that coverage. I do want to point out the yield shift we see. The yield curve actually pretty static here, but the real yield up to new recent recovery highs, 1.69% on the inflation-adjusted yield. That changed the dialogue for everybody, Lisa, including Blackstone.